Good afternoon.
Good afternoon.
Hearty welcome to each one of you for this 5 days workshop on bank branch audit. A second day we are in. Today's topic to learn LFAR, long form audit report, and tax audit, form 3CD and other certificates. To share knowledge in these topics, we have an eminent speaker. CA Venugopal is with us. May request CA Mohan Kumar to escort the speaker onto the desk, and also welcome him with the floral bouquet. Please welcome the speaker. Thank you, Mohan. Friends, it is my pleasure to introduce the speaker to this August gathering. CA Venugopal, a brilliant chartered accountant, secured 45th All India rank in the year 2002. He is a tax expert, qualified in the CISA and DISA, and also completed several other certificate courses. He has also completed 1-year course in IIM on data analysis and business intelligence. A GST expert, a regular speaker on GST topics all over India. Apart from that, he is a hands-on on coding in VB, Net, R, Python. He also reviews database design. He conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He was behind in the development and managing of cloud applications like TaxSmile, Insta Financials, and others. He has conducted several workshops and seminars regarding bank branch audits also in various places. Today he is going to talk about long form audit report, form 3CD and other certificates. With this brief introduction, please join me to welcome him once again.
So it's a good gathering to see people interested in having a detailed workshop on bank branch audit just before the branch audit coming up. And this being a 4-day workshop, you would get detailed insights into the bank branch audit as compared to a 1-day workshop where it is more into a quick review. So now you will also get an insight of what else you have to do when you are at the branch and how you can plan your work, etc. So before I get into the session for the day, which is on long form audit report, tax audit report and other certificates. So I would first quickly want to know how many of you are doing the bank audit for the first time, bank branch audit. Anyone who are doing? Yeah. Okay, so a couple of you are there who will be doing the bank branch for the first time. All right. Now, those who have been doing the bank branch since many, today's discussion you could relate it more like a recap because you've already been filling the long form audit report, tax audit report and other certificates. However, bank branch audit is more like an annual exercise. In fact, we dust our books, review, recap maybe from 15th March and we complete the audit by 15th April. Then again, it is not required till next year unless otherwise someone is into concurrent audits, right? It is very much essential that we review, though we've been doing it year on year, because there are minor changes that happen and also a quick recap as to what we need to do. So it is the kind of a planning exercise we do it. Yeah. So till that tea break session we attempt to complete long form audit report. Then post tea break we will do tax audit and other certificate. But I would give more emphasis on the long form audit report. Maybe if something spill over we can take in the next session also. So just to understand the genesis of the long form audit report. Alright. This per se was not there as a part of the Companies Act reporting, or this was not there as a part of the RBI regulation. But however, the banks needed more effective internal control systems. And not just that, today if we have to go to a branch, there has been so much transfers. In fact, bank job used to be always said as a role where the branch manager gets transferred from one branch to another branch or one city to another city. And that being an environment which is highly involved with the cash and other aspects, more susceptible to the frauds. Now today we have a computerized environment, CBS, where the controls were built in. But the earlier days where it was on a manual system, it needed not just the main audit report, where the branch auditor is visiting and giving the branch audit report. So it was needed to discuss on the controls which exist in the branch. And the controls cannot be discussed in the main audit report of the branch auditor. Unlike we have key audit matters which have come very recently, we do not have anything called if there is anything which needs to be reported by the branch auditor to the management or to the central statutory auditor or to the RBI. There was nothing specific there. So since 1985, the RBI has introduced an additional report called long form audit report, and time to time some aspects of the long form audit report were getting changed, and the current long form audit report which we are seeing is the status quo since 2003. What does our LFR contain? LFR is divided into 4 parts. Part 1 is to do more with your assets. Part 2, a discussion on liability. Part 3, on the profit and loss account. And the part 4, all miscellaneous items. So there are general items to be discussed. So if you plan your audit properly, see, end of the day, your audit, you are doing an audit of assets, liabilities, profit and loss account, right? So you got to ensure that you integrate your audit workings. You integrate your audit workings or audit execution plan such a way as you are auditing any item of a balance sheet, whether asset, liability, P&L account. It should be such a way that you have to plan that you are also covering an aspect that needs to be reported in long form audit report, and you are also covering the basic assertion which you are giving to the financial statements, that assets really exist and they are not overstated and the liability is not understated and the period related both income and expenses have been recorded, right? So you are giving the assertion on the financial statements. So you have to plan such a way that whenever you are doing an audit of the balance sheet, the required questionnaire which is required to LFR is also covered. I would put it another way: if you are covering LFR, at least 70% of the audit related working papers are also you would be covering it. So the LFR is such detailed and reported. So in today's session we would be looking at what are the contents of the LFR. So that as you are looking at these are the contents of the LFR, you can plan, you might have your own agenda of how do you want to do the audit. You would have already made some frame in your mind. You can include these topics in your audit execution manual. The only thing which I would recommend in LFR when you are reporting is, please ensure that you are preparing LFR by your hand. It's like we have this habit of Control C, Control V, and whenever the data is in the soft copy, either we copy some other format, some of any friend who has forwarded the LFR which he has filled, we would have copied and pasted, or we have done the audit in the last year. Just okay, I have done the audit of Indian Bank X branch, this year also I am into Indian Bank, just copy the LFR of the last year of the Indian branch, change the DP code or the circle code and change the date, and we think it is complete. Generally LFRs change, the observations would change. The another point which I would want you to take a special note is we should avoid reporting abbreviations in the LFR. When I say abbreviations, some of us have a habit of yes, no, nil, NA. Right? So whether it is yes, no, you have to have a reason why it is yes. So LFR should be more like a speaking report. If someone is reading, they should be able to understand. Even if you are saying yes, why it is NS. I am not saying that you should give a history or your audit observation notes completely. But it has to be an instructional report. A reader of the report should get an understanding that why you are saying an S. It can't be just a plain yes. Right? So these are the two things which I want you to keep in your mind. And as we progress, if you have any questions, we can discuss on. So what I have done is I have listed out entire questionnaire of the LFR so that we will do a quick glance, and as we are reporting that observation, what should be our audit approach, what are the things we should be taking care. So moving on to the first item, which is assets. Under assets, what we would be reporting is cash and bank related aspects, investment related aspects, advances and other assets. These are the items we would be reporting in LFR. And when it comes to the cash, we would report on the physical cash that exists in the branch and the bank balances which they are held with other branches, and the money at the call notice, the money at call and the short notice. Then advances, we would give the observation of the advances on the full cycle, which is the credit appraisal mechanism, sanctioning and disbursement mechanism, the review and monitoring and the supervision, and lastly, we will also have a non-fund based related item reporting. Then there are other assets which in the branch, which is stationery, stamps and all sundry assets. So your assets which you can see in the balance sheet leaving the inter-branch, you will be covering all the items in the balance sheet. Sometimes your inter-branch account would be on the deposit sides, on the either on the liability sides or on the asset side. So the inter-branch related observation would be common for both. The first and foremost thing of the assets is cash. There are 4 items in the cash we would be commenting on. First, the balance which is held in the branch. So the branch balance, whether it is varying significantly from the limits fixed, and the balance which is there, is it adequately insured? Both the cash which is there in the branch and the cash which is there in the transit. Next, the cash which is there in the custody, is there a dual custody? Is there a joint custody? And is there a periodical checking of the cash by other staff? These are the 4 points we would be commenting in the cash. When it comes to the limits held, so the questionnaire is whether verify the cash retention limit and comment on instances of excess cash beyond the retention limit, and if it is so, whether the same has been reported to HO. And the second point is asking for obtaining cash limits fixed at the ATM machines and verify the cash which is fed at the ATM is more than the limit, and if so, it is reported to higher authorities. Insurance, who is getting the cash insured? Most of the times when the cash is being insured, if you ask for the insurance certificate, either you will get an answer saying that here is the insurance certificate, or the insurance is taken at the head office. The insurance is taken at the head office centrally. Now you may ask the next question, okay, if the insurance is taken at head office centrally, copy of the insurance certificate. So there would be a copy of insurance certificate at the branch. So if the copy of certificates exists at the branch, you would look for whether the branch name included in that certificate. Then what is the value of the insurance included for is what you have to check. Now there might be a situation where a group of branches, a zonal level or at a regional level, the insurance has been obtained by the bank. Now the insurance which has been obtained at the zonal or regional level, maybe it may say that the insurance is taken for 5 crores limit. Now you do not know what is the value of the insurance for this particular branch. See, you are commenting whether the insurance which is taken at the branch is adequate or not. If the branch is on an average average having a cash retention limit of 10 lakhs or say 20 lakhs, whatever be the balance. So you got to know, you got to ascertain yourself that the insurance which has been taken at the zonal office, which is included in the branch, what is the limit for which they have taken. Because though they may have taken a 5 crores general insurance for so many branches, does the average cash limit or the limit which these branches are retaining, is that the so? Tomorrow if there is a cash theft which happening and will the insurance claim be there in full, answer might not be no. The issue might be there is only one branch which has got into say some cash theft happened. Now when they go for making a claim of the insurance, say out of 5 crores policy, then there is a claim which is made of 20 lakhs or 30 lakhs, the insurance company would also not give in full, because the amount which has been insured for the branch might be 10 lakhs and the cash embezzlement which has happened is 20 lakhs, which means the branch is underinsured. So proportionately to the extent of the asset value versus the insurance made, there would be a reduction. So your comment should be, if you are seeing the insurance policy, yes it exists, then it's not that the policy being there, whether the adequate insurance cover is there for the cash on hand, and the cover should be both cash on hand, cash at the ATM, and the cash which is there in the transit. So all this cash has to be adequately insured. So sum total of this cash has been considered for the purpose of insurance or not is what you have to ascertain and give your comment. Even here if you are saying yes, what is the basis? You can say that yes, there is an insurance certificate, policy in existence, policy dated, whatever. You have to give a comment. If it is no, you may say that yes, there exists an insurance policy, however there is an inadequacy in the amount of the insurance made. Or you may also comment that there is an insurance policy, but the amount or the quantum for which the insurance has been obtained cannot be quantified. Right? You got to have your explanation given in your LFAR as an instructional or a speaking audit report. And as usual, you got to look at what is the policy date. If the policy has expired, has it been renewed? Generally, it gets renewed. This is taken care at the head office, but you got to check whether the policy is in force or not. Next, on the cash, you also have to comment whether there is a joint custody of the cash. Now, some of the aspects you might not be knowing during the branch, or some of the aspects you are relying upon the statement of the branch manager, or some of the aspects you are physically verifying. So you also have to make a note what observations would go to management representation letter. So you would definitely have a standard checklist of a management representation letter, and whenever some points where you are relying upon the oral statement given by the branch manager, then you would be considering that point to be reported in the management representation letter. So when you are verifying the joint custody exists or not, so your audit approach would be, first look at what are all the guidelines given. Generally head office gives the guidelines of who should be the custodian of the keys. Generally one set of the keys would be with the cashier, and the second set of the keys would be with the branch manager or the in charge, or there is a designate person. So based on the ranking it would be designated and they would be in charge of it. So you have to look at what is the instructions that is given by the head office. And in case of the ATM machines, even the ATM machines, loading of the cash to the ATM or opening those machines, even that is jointly exists. And whenever an ATM is opened, there is a physical register or record which is maintained. So you got to take a look at whether they are recording entries into that ATM machine whenever they are opening the vault and reporting, and whenever they are filling the cash. So you have to confirm that both ATM and the chest, whether there exists a joint custody, and they are also having a track of cash being deposited into ATM, right? So this is your audit approach when it comes to the cash. Then comes physical verification of the cash. Now those who have been doing the audits, do we verify the cash physically? Do we need to verify? But the amount of cash they would have is 20 lakhs, 30 lakhs. So do we need to verify the entire cash? Can we do a random sample? Is it possible to do a random sampling cash? Can I, possible? Definitely no. Now given that there is no random sample possible in the cash because it is an asset, you are checking for the completeness of existence of the asset, you would have to end up verifying the full cash. So generally branch cashier has to tally cash on a daily basis. End of the day he would have a physical scroll where he would be doing a counting of the cash. He would be mentioning the denomination of each and every cash denomination, tally with the last paise, or if there is a difference he has to make note of difference and report it whatever is the book balance, and he has to tally with the physical balance. So you have to check whether there exists a physical cash book and pick up random dates and see whether the balance which is there and the system the cash balance is it matching or not. And when it comes to the physical cash verification, see, we are not an expert in doing accounting of the cash. You should allow the cashier to count the cash and report to you whatever is the cash balance. In fact, the only thing which you can do is you can put some amount of the cash. So from the cash scroll you can pick some amount of the cash before start of the cash verification. You can put it in a cover, seal it and give it back to the cashier. So once the cashier verifies the entire cash, you can open this seal and count the cash, and the sum total of this and the whatever the cashier has counted should tally with the whatever is there in the scroll. So you need to find a method of how do you simplify your audit process, yet you will achieve the audit objective. In case of a foreign currency, all the above points whatever we have discussed, it is applicable to even the foreign currency also. A special point is if the as I said first, there is a process of their branch reconciling denomination wise on a daily basis. You have to check whether it exists or not. Second, branches are expected to have these counting machines, not just a machine for counting, it also has a machine where it verifies the fake note or the original note. So today these machines which are coming automatically, when you feed it, if at all it is a fake note, it disposes automatically and says this is a fake note. So you have to check whether there exists a methodology for the branch to control the cash related risks that come up. So these are the observations you would have on the cash aspect. Anyone, any doubts, any clarification? Moving on to next item in the cash is the bank reconciliation. Bank reconciliation in LFAR is no different from your regular bank reconciliation. What do we do in our bank reconciliation? We obtain the physical bank statement of the bank and we reconcile with the bank book. So you might also encounter many times where the banks maintain bank account with other banks and there are some transactions, especially if you see the rural or wherever whomsoever is going to the rural villages, they have an account with the say SBA. So whatever is the cash collected, they deposit it to SBA and route it, or if they have some clearing checks to be forwarded, so they use the other banks also. So your bank reconciliation is no different from your regular bank reconciliation. The questionnaire which you have is the balance confirmation certificate obtained in respect of the outstanding balance at the year end and have it been reconciled. If so, if there is a difference, nature and extent of the differences to be reported. And your observations on the reconciliation statement may be reported on cash transactions remaining unresponded, revenue items requiring adjustments, old outstanding balance unexplained at the end of the year. So if your bank reconciliation says that cash deposited but the other bank has not responded. So as on 31st March, this bank has deposited some say 5 lakhs into the SBI branch of the other things or other bank, and in the bank reconciliation it is not available. Then it is an observation of the bank reconciliation. So your observation of a bank reconciliation has to be segregated into these 3 categories. One is cash transactions remained unattended. Second, if there is any revenue item which requires adjustments or write-off, and the items lying in the bank reconciliation which is not attended or more than 6 months or more than 1 year, you have to segregate and give. So generally bank reconciliations do exist, not necessary that your bank balance and the bank statements match. There would be a reconciliation difference. If the reconciliation difference pertains to these 3 items, you would need to have a specific reporting separately. And if there is any management attention you would want to bring, any additional point, you may report it. So as a part of the audit approach, you would verify whether the branch has any balances with the other banks. If so, get a confirmation letter from the other bank wherever it is applicable. Did the branch prepare the BRS and test check the BRS entries. In fact, you should ask whether there is a method of reconciling BRS on a periodical basis. Like how you check for any other clients where you do the statutory audit, you would check whether they are doing BRS on a monthly basis, fortnightly, quarterly, what is the periodicity at which they are doing the BRS. You should also ask. And for unattended items in the bank reconciliation, you might also have a reason that okay, it would need an expenditure to be provided for, then you have to issue an MOC separately. And whenever an MOC needs to be issued, there would be an instructions from the head office which would state that the value beyond so much amount, the MOC need not be prepared and an accounting entry can be done in the current period. For example, an expenditure of say 4,000 has been missed out and the head office has given the threshold limit for MOC is 5,000. Any expenditure beyond 5,000, please give an MOC, otherwise it is not required. Now for that item which is unattended 4,000, all that you have to ensure is that the branch manager has recorded that entry on 2nd April, 4th April whenever you are visiting the branch for the audit, and you will not qualify in your MOC though it is an item of 2018-19 which needs to be dealt as on 31st March 2019, owing to the materiality, whatever the threshold limit given by the head office or your appointment letter would also have a closing instructions. In fact, the closing circular is a very important document one needs to refer before you complete the audit. Then the third item in the cash is money at call and short notice. So generally most of the branches you would not find money at call and short notice, right? Unless otherwise if it is a specialized branch or the bigger branches who generally do this as a money at call and short notice. Money at call means it is money which has been lent for 1 day, and money at short notice is it is more than 1 day but less than 14 days. So whenever the money has been lent for this period, it is called money at call and short notice. Now branches are not permitted to do this. It is kind of like your intraday trading which you do in your share market. The branches are not permitted to do these kind of advances unless otherwise permitted by the head office under their instructions. Whenever you find money at call and short notice, you have to first ask for, does the branch has power to execute these transactions? That's the point number 1. Second, these are also like your fixed deposits. So you generally people will not do a fixed deposit of 23,46,733 rupees. Like you always do it at round figures. So you will also have to check if the balances in these ledgers are not at a round figure and they are appearing as an odd number. Maybe some interest has been added back to this, and maybe some error might be there. I am not saying that it is wrong. Generally the balances in these ledgers would always be a squared off ledgers. You have to check whether is there something grouping error or something is wrong. And they will also have a limit, authorization limit up to which they can do a money at call or money at short notice. You have to ask for what is the limit the branch is eligible for. The next is on investments. Any doubts on the cash and bank related so far? Alright. Again, investments, 90% of the time the investments would be nil in the branch audits. It's not that you would find investments in most of the banks, but definitely in some places you would find the investments. So investments have 2 questions: branches in India, branches outside India. We would look at branches in India. So there are 6 questions you would be looking at. So in case of the branches which are there in India, so the questionnaire is, are these investments held by the branch on behalf of the head office or other offices of the bank? So which means someone is investing and the investments are parked in this branch. If so, whether these investments have been made available for physical verification or evidence has been produced with regards to the same where these are not in possession of the branch. So if it is invested by other branch and it is recorded here, so has someone else done the verification and it is reported. And any amounts received as income on such investments have it been reported to the head office. Third question, in respect of the investments held by the branch on behalf of the head office, other offices of banks where the income is accrued, received and recognized as income of the branch contrary to the instructions of the controlling authorities of the bank. So if the branch Suvamoto is recognizing the income, you are again looking back the instruction from the head office. Whether there are any matured or overdue investments which have not been encashed, if the investment has been expired and it is not withdrawn. And guidelines of Reserve Bank of India regarding transactions in security have been complied with. Lastly, the guidelines regarding valuation of investments have been complied with. So these are the 6 questionnaires you have to answer with regards to the investments. 90% of the times the branches would not carry investments, so you might have nil, but you have the investments, you have these questionnaires. So from the audit point of it, firstly you will be checking whether the nil, if the balances in the investment is nil, you should again talk to the branch manager and ask, are their investments nil and is there any grouping related issue. If there are investment, then you have to obtain a schedule of investment. If the investment is showing some 23 crores, then you should obtain the schedule of investments where all the investments happen. Whether it has happened in the stock market, in other, where did the investments happen, you have to have the list. And if the certain investments are verifiable, physical verification possible, you have to conduct the physical verification. And the branches where they are maintaining investments, they are expected to have a separate register called investment register. So you have to verify the investment register. And wherever the investments cannot be verified, you also have to make a noting that these investments exist but it cannot be verified. And if the investments are periodically valued, because you also have to govern, you are governed by the standards. Since these are investments, you also have to look at what is the carrying amount of these investments and whether the valuation principles of the investment has been done or not. Like I said, generally this is not applicable for most of the branches, and investments in branches outside India, this is not done at the branch, this is done either at the circle office or the head office level. It doesn't happen at the branch level. Next important aspect in the LFIR is advances. Now advances are into 5 subcategories where you will be reporting. You will be reporting on credit appraisal system, which means before you sanction the loan, how well you are collecting the documents. So how well you are doing the appraisal before the loan is sanctioned. Then you would also comment on sanctioning. At the time of sanctioning and disbursement, what is the compliance level the branch has? You have a separate question on the sanctioning. Then the documents. Each type of loan there is a separate documentation. So how well the branch is keeping the documents. Post the loan has been sanctioned, documents have been obtained. What is the methodology of a periodical review of the loans given, sanction made, or the supervision which is happening. Then you also have non-fund based limits which are given, which are guarantees and the letter of credit. You will have an observations to be made on those aspects. Generally, you will also have an observations to be made on the large advances. In case if the advances are large, you have an additional reporting which you will be doing it. What is a large advance? Large advance is if a borrower has an outstanding more than 5% of the total advances. if the branch under which you are doing an audit, if the branch under which you are doing the audit is a size of 20 crores, 5% of 20 crores is 1 crore. So any borrower whose outstanding is more than 1 crore, you would be reporting it. You are auditing a branch where the advances is 100 crores. 5% of the 100 crores is 5 crores. Now, it is not limited only to 5%. There is another condition. If the outstanding of the borrower is exceeding 2 crores, even that is classified as a large advance. So if you have a large advance, you have a separate checklist in the large advance. You can consider this the checklist which is there in the large advance. It would be shared by the branches in the closing circular itself. A detailed circular or the detailed list on the large advances, which has roughly around 25 points, where you will be describing the details of the borrower, the name, address, the turnover, their audited financial statements, the stock statements, the type of funds which they, the limits which they have, how much is fund based, how much is non-fund based, and what is the current classification by the branch, whether it is performing, not performing, if it is a consortium loan, who is the lead banker, so in whether insurance has been taken, whether there are guarantees. So you have a checklist. You have a detailed checklist for the large advances. So whenever you are appointed for the audit, the first thing, as you anyhow you will be doing, calling the branch, asking for the advances. You also have to ask, are there any large advances? So your definition of the large advances, 5% or 2 crores, whichever is higher or lower, whichever is lower. So if there are large advances, then even the branch manager would have a checklist. Your job is to ask the branch manager to make the details in the checklist to be filled and available. If you start filling the checklist, it would easily take half a day to prepare the checklist for one account. So the branch manager should keep the documents data available. Most of the data of the checklist can be downloaded from the CVS itself, because CVS would carry the information which is asked in the LFAR. Your job is to verify the correctness of it. Now, even if the branch manager has not prepared, it is your job to fill that and submit it. So you have to buffer additional time in your audit planning whenever the branches has LFAR. Additional LFAR. When I am saying additional LFAR is the advance where there are large advances. And if the branch is filling the large advances report and giving it to you, then you would definitely have half an hour for each large advance to be verified. So you have to buffer so much time in your audit planning. So let's look at each point in detail. First, on the credit appraisal. So the question is, in your opinion, has the branch generally complied with the procedures or instructions of the controlling authorities of the bank regarding loan application, preparation of the proposal, grant or renewal of the advances, enhancement of limits, including adequate appraisal documentation in respect thereof. So you have been asked a certain questions. So from the audit approach, you have to first ask for what are the types of the loans that exist in the branch. So you should be aware of what documents to be collected before the sanctioning. Like if it is a term loan, you need to know what are the machineries they are going to procure, and you would be looking at how the debt service coverage ratio is there and whether they have prepared projections for 5 years, 7 years, accordingly the loan can be repaid. If there are CCOD loans, then you should be looking at whether the stock and book debts cover the amount of the exposure which is given, and have they prepared maximum permissible bank finance. Because if you have a stock of 2 crore, doesn't mean that you will get entire 2 crores. You would be reducing unpaid stocks. So the vendors where it is on a credit where you have taken, so there is no working capital blockage, and there is a percentage discount. So entire stock is not funded, maybe the 25% or some amount. So in the appraisal system itself, have they budgeted in the stock and debtors after the discounting, whether they have a method to do it. generally there is a checklist for pre-sanction. So you have to pick any of the loans sanctioned during the year, ask them what is the checklist they have followed. And today the loan processing is centralized. Branches, PSU branch managers have certain powers where they would be doing the sanctioning under their level. Beyond that, they are technically doing a courier job where they collect the documents and forward it to the head office. So your job is to ensure that whether those documents have been collected or not. And this is not applicable only for new loans. This is applicable for renewal of a loan. This is applicable for enhancement of the existing limit also. And whenever they are collecting any documents as a collaterals before sanctioning, have they obtained evaluation reports, so that because that is an underlying document basis which the loan has been processed. So you would have to check whether the branch manager is doing a pre-sanction policy, so which is more like a checklist. So you should be asking your branch manager the new loan sanction. Right? Now I would have to tell one point about the topic which we are discussing. In a bank branch audit, which is more interesting is when we discuss on IRAC or the other some key certificate. And when it comes to the LFR, it is like a story. I am telling you one story, and how well I tell the story, that will put you to the sleep. So, and that too, this is an afternoon. So I know some of you people are trying to gather your attention and to watch this session. So in the best interest of everyone, I would recommend that you make some of the observations, and especially those who have done the audit in the past. Some areas, trust me, you would have missed out in verifying that aspect. So if you can make note then and then, so it will also grab your attention, and you can also do your planning. See, most of the audit planning, you have to do it much before the audit is starting. You cannot go to the branch and say, okay, I have come here with 3 people, now let me decide who will do what. No, it doesn't work that way, because audit is a very time-bound activity. If you are there in the branch for 3 days, 4th day, first thing in the greeting which comes in the morning call with the branch manager is asking, sir, are we sending the report today? And nothing happens on the 5th day, you will get a next call from, not from the branch manager, from the zone or the regional office. Sir, is the branch everything okay? Is the branch manager cooperating? Indirectly he wants to know, when are you getting out of the branch? So it is like, since it is a time-bound activity, and you cannot compromise on the quality. See, earlier were the days where the branch audit was more to do with IRAC, the provisioning, asset classification. But today that is computerized. 99% of the work is done by the systems. So you have to ensure whether the systems which have done is correct or not. And how do you ensure is by way of documentation. If you have done the audit and you do not have a document, it is as good you have not done the audit. For example, first example which I have seen on the cash. Cash retention limit of the branch is say 10 lakhs. Your answer to that is yes, which means you have not done the audit. Your yes should back by, you should have taken the screenshot of the scroll for say 5 different dates, 7 different dates, looked at what is the expected balance, what is the balance. Even if you are writing no, you have not done the audit. Your no should be backed up by some documentation. And especially LFR, you got to have every item you have to comment. You cannot have a nil LFR being submitted. It is as good you have not done the audit, and you will be critically questioned. And today the audits done are re-verified by the RBI auditor, ensuring that whether you have done the audit properly or not. And if there is a peer review which happens, and if the peer review is happening to your firm or to your practice unit, even the branch audits are covered under peer review, and the audit documentation is looked into, the underlying what are the documents you have done, you have by basis which you have given the answer. And most of our times the audit documentation is also, it also needs to be improved, because the students or the articles or the paid staff who are doing the audits, so they come with their audit notebooks and they write their observations in their notebooks, and during the audit you would be finalization, you would discuss that. And after the audit is done, they carry the same notebooks to their classes. So after the bank audit, you will find some costing notes, income tax notes. And sometimes we tear those papers and staple it and put it in the work file. But the work files are maintained in such a way that all the documents, now given that the documentation is the key thing, we obtain all that, whatever we find. Okay, you signed something, okay, this is the back working, we will collect. Anything we find it, we collect it. Now there is nothing wrong about it, but the bad thing about it, we collect everything, we neatly bind them, we staple it, on the top of it we print that, okay, Indian Bank, MG Road branch, 2018-19, we print it, we bind it, put it on the top. Now during the peer review or during the RBI inspection, for some reason you open that working papers. You don't even know what to find there. It is like institute guidance note, we have 610 pages guidance note. I remove those 3 pages where it has the index and I am giving you the guidance note. And during the bank audit, every time say you want to check for the LFAR. Now LFAR there it is there in the page number 95. Now you would be searching, okay, where the LFAR is. So if you do not have an index, it is as good as an unusable document. Sometimes, most of the times, our audit working papers are also the same way. You have everything but without index. And the working papers are also today mostly computerized. So you have obtained the course of the documents for the credit appraisal systems. Some of the things you have taken the screenshot, or you have some photocopies kept and you have scanned and put it in a PDF document. So you open your working folder, you will see a lot of documents. What document corresponds to what, we do not know. We do not properly index. We do not create a folders and do it. And most of the files you would have downloaded as a CSV, HTML, converted into Excel, and you would have done the audit. And these Excel files or those files, how do you maintain? We have new workbook 1, new workbook 2, and we open it sheet 1, sheet 2, sheet 3, as if the sheet 1 is cash. So we have to improve the documentation, and these documents have to be correlated to LFAR and also the balance sheet item. So every item in the balance sheet needs to have a documentation. Likewise, every item in your LFAR needs a documentation. So it's also a time one has to look at, in that point in LFAR, what should be your audit document working paper, and how do you trace it at a later point is another important thing one should be careful about. Next thing of the credit appraisal is sanctioning and disbursement. So after the credit appraisal is done, you would be reporting 2 points on the sanctioning. So the first point is, in the cases examined by you, have you come across instances of credit facilities having been sanctioned beyond the delegated authority, limit fixed by the branch? Are such cases promptly reported to the higher authorities? And in the cases examined by you, have you come across the instances where the advances have been disbursed without complying to the terms and conditions of the sanction? If so, give the details of such cases. So these are the 2 questions you would be answering in terms of the sanctioning and disbursement. Now, most of the times, I also notice during the review of the LFAR reports, the answers to this would be either nil or yes. Now, the nil or yes should also be backed by your working paper, what loans you have verified. Maybe an agricultural loan, maybe a term loan, maybe a vehicle loan, maybe a gold loan. What loans you have verified? How many loans have been sanctioned during the year? Of the loans which have been sanctioned during the year, how many you have picked for sample? If there are 100 loans sanctioned during the year, you picked 1 loan for sample. Is that sufficient? Is that sufficient? Yes, no, maybe. Should you verify all 100 loans? How do you test the sufficiency? Sir is saying value. Okay, the value of the 100 loan sanction during the year amounts to 72 crores. How do you test the sufficiency of the number of accounts to be checked to give a comment for this question? How many accounts you have to pick? Should you verify all accounts?
Top 10.
Okay, so one thing is top 10.
We choose
Now-
sector wise.
Yeah, so another way is choose sector wise, right? So it's a sample. You have, whenever you are doing a sample verification, your sample should always reflect the population. So your sampling should be such a way that you are picking the various sectors and you are also picking the various samples, not just the top 10, top 100. You will pick a high value item, also low value item. For a low value item, is the documentation there or not there? Do you think the documentation is complete in all the times? Yes, no? How many times we report a comment in this aspect? Tell me one documentation which is generally not complete.
Even loan applications still in your sign.
Loan application, sir is saying it is not signed. So I would say, I would take a little more. It would be signed. It would be signed on all the papers. Wherever, like bank means signature. In fact, if someone asks the bank branch audit, what is the first thing that comes to my mind is signatures. My signature gets perfected or becomes worse at the end of the bank branch audit. At least some 100-150 signatures we will be doing minimum. So at least 20 certificates, 20 into 480. So you will do 200 signatures minimum for one branch. So you would find the balance certificate, application form, sanction terms, everything is collected. Most are filled blank, nothing. What is borrower interested in? Loan. Borrower gets the money, he doesn't care whether the form is filled or not. What is the banker interested in? Whether the document has been signed or not. Because after giving the loan, I cannot get the signature from the customer. So both are fulfilled, but the objective gets fulfilled by signing the document. It would be inked later whenever it is needed. So during the course of your sanction terms and the disbursement, you have to verify whether that has been properly done or not. If you are finding some documents which are blank, you have to critically appraise in your LFR, saying that I have identified so document, so and so loan number. The document is empty, it is not filled. You have to put it in your LFR. Or this is filled on the observations made by the staff. After the observation made by the branch auditor, this has been filled by the branch manager. You have to give your observations. Unless you give your observations, it is as good as an expectation that you have not done the audit. If you have to prove that you have done the audit, you have to say that okay, I have verified this loan account, I have verified these documents and these documents are intact. Which itself indicates that you have to know if it is a vehicle loan, what documents you have to verify. If it is a term loan, what documents you have to verify. If it is a crop loan, what documents you are verifying. If the pani has to be obtained, whether it has been obtained, or if the duplicate copy or duplicate key has to be obtained, whether it has been obtained, if it is an FD loan, whether the lien against FD has been marked. So there is a questionnaire which you will be looking at. So from the audit approach, you will be verifying the credit facilities sanctioned are beyond the delegation powers or not, and if there are anything, you will be reporting it. And there is a detailed questioning on the documentation. So when it comes to the documentation, you have a questionnaire covering around 17 points asking various items in the documentation. So there are 16 items. Various items in the documentation is complete or not. The most part of the LFR where one would be spending time is this point, which is 5C, where you are commenting on the correctness of the documentation. So let's look at firstly the questions which are there in the documentation. So, in cases examined by you, have you come across the instances of the credit facility released by the branch without execution of necessary documents? If so, give the details. In respect of the advances examined by you, have you come across instances of deficiency in documents, whether non-obtainment of the guarantees or non-registration of the charges? In case of the lien against the deposits, whether they have been properly marked the lien and in the guidelines of the controlling authorities. Okay, I'll come back. And if the procedure laid down by the controlling authority is proper or not. So whenever you are seeing the documentation and other things, you have to have a manual of what documents to be there. Today there are a lot of checklists, including the guidelines given the bank, technical guide on the issued by the ICA also has various documentation to be each account. So there are a lot of audit material which is available. Type of loan, what should be the document available? There is a checklist, you will have to check that. Then in case of review, monitoring, supervision, so the first and foremost thing, if there is there a procedure laid down by the controlling authority of the bank for a periodic review of the advances, including confirmation of the balance, acknowledgement of the debt, followed by the branch. And if something is not done over more than 6 months, more than 1 year, this needs to be reported. See, today we are expecting a confirmation of balance from all our debtors and creditors in a stat audit. Similarly, in the bank audits, the closing balance of the branch has to be confirmed by the borrowers. So generally, banks fill a confirmation of balance certificate. In fact, when you are doing a loan sanctioning thing, you will find a confirmation of balance certificate, undated, unfilled, signed by the borrower, which is again technically wrong. So if you are finding any confirmation of the balance letter, which is undated and unfilled, signed by the borrower, later the branch manager is filling it whenever it is in need. Technically, they have to call for all the borrowers, get the confirmation of balance. So you have to randomly verify and check it. Generally, most of the times you wouldn't find it. Next, the stock and book statements or other periodical operational data and the financial statement, whether regularly received from the borrower and it is duly scrutinized. Is suitable actions taken on the basis of such scrutiny in the appropriate cases. So the stock statements have to be obtained, and you would find in some cases the stock statement is same stock statement printed 6 months, you will find the same stock statement, just the heading is changed, month of June, month of July, month of August. Sometimes the stock statement is hand filled and you will quickly see the major items, the same value gets repeated. Or you would see the stock value which is there in the bank, which is the stock statement given, vis-a-vis 31st March stock statement, there would be a substantial difference for the income tax report, whatever which is submitted versus the stock statement which is submitted to the branch. Now you have to see whether the branch manager is doing anything with the stock statement. Whenever the stock statement received is just collected and dumped in the stock register, or is there a scrutiny happening to the stock statement? It is expected that also a stock verification to happen. If the advance given is more than 5 crores, there is a quarterly audit also happens. So the bank to bank, the limits vary. Not just the submission of the stock statement, there is also an expectation of reporting of the stock audit. So on a quarterly stock audit which happens, someone would be verifying the correctness of the stock statement done. So you would also verify that obtaining of the stock or reports on the stock audit is happening on the periodical basis or not. And in case of the advances given to non-corporate entities where the limit is beyond 10 lakhs, then the borrower accounts have to be duly audited under the RBI guidelines. So the borrower has to get their accounts audited, generally which do not happen. So you have to qualify that okay, loans have been given but there is no audit done by the audit of the accounts of the borrower has not been done. Next, the inspection of the physical verification of the securities charged to the bank has been carried periodically by the branch. Generally, the branches come they do the unit inspection and they look at, in case of the machinery which is hypothecated, whether the hypothecation has been endorsed or not. If it is a vehicle loan, whether the vehicle has been, on the vehicle it has been written whether it has been hypothecated to the branch or not. And wherever they have deficiency, they would give an instruction to the borrower and also report to the controlling authority. And in respect of the advances examined by you, have you come across the cases deficiency in the value of the securities and inspection thereof of any other adverse features, such frequent unauthorized overdrawing beyond the limit and inadequate insurance cover? So you also have an obligation to do a physical verification of the units. You have to assess yourself, does any of the loans require a physical verification? In fact, as you start your audit, you can see the list of term loans or the OD loans. You can say that, okay, I would want to verify these loans. You can say that I want to visit these borrowers and see whether those assets exist or not. It is purely an analytical call. You would be doing it, and you should make sure that you are starting the audit. No loan officer is on leave. You have to give a specific instruction that loan officer should be there when you are doing the audit. It so happens as a strategy saying that, okay, loan officer is not there, and as a branch manager I have to be in the branch and the unit inspections cannot happen. And whether you are doing inspection or not, you have to make sure that the branch manager is calling each borrower, the respective borrowers which you have said that inspection happens, they have to be intimated. And cases where the borrower says that, okay, please avoid the inspection because it is on holiday, we are not there, you have to do a special attention and look at do a system audit, do a health checkup of the audited financials, the loan given, the document, and wherever you have a doubt, you should definitely make a visit to those units. And in case of a lease finance, has the branch complied with the guidelines issued by the controlling authority? And especially the credit card use. Today the credit cards are a centralized thing. So the banks also have a different schemes. Sometimes the credit cards get extended to the SB account also, or the current accounts. If those accounts, credit card accounts, have gone overdue, then they are also technically as good as a loan given. So if the credit card dues are there, have they been promptly recovered, it has to be answered. And as the branch identified, classified the advances into standard, substandard, doubtful. So basically you are also commenting on the IRAC provisions. So I think yesterday you had the IRAC, the session on the IRAC. Now at the branch, do you make a provision for the assets classification? Does the branch make a provision for NPA, doubtful, substandard, loss asset?
No.
Does the branch make provision?
No, sir.
No. When the branch doesn't make provision, should you need to verify? Why do you need to verify?
We need to verify, and our report is given to the zonal office. No?
Yeah, so you verify, and do you provide for it?
We don't provide it. We do the audit as per the circular and give the report. It's up to the higher office to consolidate and take a call.
Yeah, so we do an audit and we give the report. Now, we are commenting here the classification is correct. If the classification is not correct, we would issue an MOC. MOC for what?
For changing the asset classification.
We change the asset classification, and then what? Because of the change in the asset classification, the provision also changes. Alright? You do not have MOC only for asset classification and provision. There are various MOCs exist. 3 different category of MOC. Though the IRAC has been computerized, as the branch auditor you will also have to comment on whether the IRAC is correct or not. IRAC is completely automated. System classifies the accounts as NPA, not an NPA. Now as a branch auditor, can you verify whether an account has become NPA but the system has not classified? Is there a chance like that? Would there be a possibility? How is it? Give me some instances. Check has bounced. Okay, when the check has been so customer gave a standing instructions of the check for repayment of the term loans, the check has bounced. The moment check has bounced, the debit balance gets restated. The debit balance gets restated, system would automatically mark it as NPA, no? If it is overdue more than 3 installments not paid, interest or principal. Do you think the system will not mark as NPA? Is NPA marking manual by the branch manager? How would you comment at this point? Is the branch manager marking NPA, like whether it is a standard, substandard, doubtful, is the branch manager marking a loan account manually?
Not manually, by system.
It is marked by the system. Do you think that the system will do something wrong? In fact, systems are called intelligently dumb. They are intelligent because how much complicated the process is, they will do it. It is like your OD account calculation on a daily basis, balance change, irrespective of the number of transactions, number of accounts, it will perfectly calculate. If you say 3 months interest principal not served, mark it as NPA, it will mark it as NPA. But it is dumb because it doesn't have additional thinking power. You say it is NPA for 2 months, it is NPA for 2 months. If it is NPA for 3 months, it's an NPA for 3 months. By the way, there is a system audit which happens. So let's make a primary assumption that the system has been properly configured. Now when the system has been properly configured, do you think that system will not mark something as an NPA when it is an NPA?
Garbage in garbage.
Garbage in, garbage out. I am saying that the configuration is rightly done. Then, will there be a scope for you to say that the classification is wrong?
Parameters may be taken in account.
Example, parameters is wrong. One example.
Moratorium is not taken.
Moratorium is not keyed in. The moment moratorium is not keyed in, system will be expecting the repayment should happen. Repayment is not happening, it would classify as an NPA. Very good. Next.
Rate of interest.
Rate of interest, how can an account become an NPA? What would be your audit approach in this point where you are saying that everything is perfect?
Customer having both fund-based and non-fund-based.
Customer is having both fund-based and non-fund-based.
And the non-fund-based returns are not accounted for.
Okay, so here sir is making that there is a non-fund-based limits. Maybe LC is given, bank guarantee is given, they have been devolved and not paid, and it has become a bank has paid and the customer has not paid, it has become an NPA. System has, the moment an account becomes an NPA in a customer account, it will automatically mark NPA in all the accounts. System does it intelligently. Unless otherwise, you are creating two separate CAFs, two separate customer accounts. Term loan separate customer account, OD separate customer account. Then all the accounts of the customer doesn't get marked as an NPA. So second thing, maybe when you are downloading the customer borrowers, you may observe that okay, the same borrower has two different customer IDs. Okay, what else you can do in NPA classification?
Debiting current account and crediting the loan account.
So the repayment is happening by way of a debit to the current account and credit to the loan account. Okay, I have debited the current account and credited the loan account. How does it differ? Is it not a repayment?
No, suppose there is no balance in current account, TOD.
Sir is saying there is no balance in the current account, it is TOD. Even if it is a TOD, TODs needs to be addressed. TOD also becomes again 3 months not attended.
If it is limited,
If there is another point which is coming, if the limit of the outstanding balance in the loan account is more than the limit, do you think if the outstanding balance is more than the limit, the system will not classify as NPA? I am asking asking a situation where system is not classifying as an NPA and where you have to do the audit.
Stock statements older
I am not asking when an account becomes an NPA.
stock statements older than 9 months.
Stock statements,
Older than 3 months.
stock statement not received more than 3 months. Okay, how does it become an NPA?
If the irregularity consists of more than 3 months, then it has to be classified as NPA.
Yeah, see, the RBI also has given a guidance that if there are any temporary deficiency in an account, you can ignore them and you should not mark them as an NPA. But however, a customer has taken a loan, there is a loan of 25 lakhs, but the customer has never submitted the stock statements. It is a OD loan against the stocks, and there are no loans. There is no stock, he has not submitted the stock statement, or the stock statement he has submitted is of lower value. Now, in the system, the limit is marked as 25 lakhs, the loan balance is always 22 lakhs. So, system will not classify it as an NPA because it is the outstanding is lower than the sanction limit. But the issue is outstanding is lower than the sanction limit, but it is higher than the drawing power which is eligible for. Yes, again it is a case where anything which has to do with the manual work, chances there are 99% chances there is something to go wrong. But anything which have to do with the system, there are 99% chances that the system will do correct and nothing will go wrong. So while auditing this point or reporting this point, you have to be careful as to how will you audit and how do you report this. In case of a term loans, if the moratorium period is not keyed in, or there has been reschedulement happened, the reschedulement is not appraised, or there is a change in the rate of interest which has resulted in lower EMI, and the borrower is paying the lower EMI, but that has not been updated in the system. So whenever the EMIs have been changed, the system is trying to see that higher repayment has to happen, it did not happen. So you have to see wherever there are changes that happen and the changes needs to be manually entered by the branch manager, there are chances that the branch manager is keying it wrongly. So when you do the audit, it serves two purposes, whether the branch manager is attending to both review and monitoring mechanism and also the classification of the advances. In case the branch auditor is disagreeing with the classification of standard, substandard, doubtful, the details of assets and reasons thereon should be given. So every item where you are issuing an MOC, where there is a change in the classification, you would have to give the details of that here. And also whether you have classified, whether you have reported in MOC or not, you should be reporting it here. Now there is a change in the classification. Is there a situation where there will not be any MOC? There exists a change in the classification, but would there be a situation that you are not issuing an MOC? Yes, no, maybe possible.
Possible if it is not making valuable.
Possible if it is not making any value as difference. Again, when will it become not a value as difference? A doubtful asset has been, you are marking it as a loss asset, and the security which has been marked onto that is 0. The moment an asset is doubtful, 100% provision has already happened. You are also changing the classification to loss asset because assuming it's a vehicle loan, vehicle got met with an accident, there was no insurance available, so customer has been informed that the vehicle met with an accident, he cannot pay and the borrower is not traceable. The branch has marked it as doubtful because from 3 years the borrower is not visible. 3 years borrower is not visible, it has to become a loss asset, right? Now, from the provision perspective, there wouldn't be any change because 100% provision has already happened. So you also have to report, yes, these are the change in the classification, and owing to change in the classification, if there is an MOC will be given. What are the instances where the MOC is not given, you have to specifically be giving. Next, are there any instances where the controlling authority of the bank has authorized for a legal action on recovery or recalling of the advances? So the head office said you are recalling the loan and recollecting, repossessing the assets. Did the branch manager take action on it? And especially whenever the advances which are adversely commented by the internal auditor, by the RBI auditor or the concurrent auditor or the previous auditor in their LFR, you have to verify those assets 100%. Verification of those accounts are 100% is must. NPA has been promptly reported to the controlling authority. Today it is automated, so there is no specific separate reporting. But however, if there is any rehabilitation program which is undertaken by the branch, that program needs to be appraised. You should have asked a questionnaire whether there is any rehabilitation happened. So even if you are writing a no, you should write that okay, there are no rehabilitation programs have happened, and you should have an adequate working paper to it. By how can you have a working paper for this when you are writing a no to this? How can you say a no to it? You have asked the branch manager said there is no rehabilitation happened. It should be properly backed up by a management representation letter. It has to be properly backed up by the management representation letter. So you need to have an audit working paper as your management representation letter also. And please note, what are the working papers you have to collect when you are in the branch. Till you sign the audit report, you have a very royal treatment. Whatever you ask, you will be given for. After you sign the audit report, then branch manager has a very short memory. He might also forget you. And after going back to the office, if you get a certificate for signature, then you are at a bigger risk because you don't even know how to verify it, what are on the underlying documents. So you got to be very careful in collecting the documents when you are in the branch. Next, sometimes there are the loans which are given under DICGC or ECGC, and during those loans, if there are something bad, whether there are appropriate claims have been made or not. So you will be issuing a separate certificate for DICGC and ECGC, and you will be looking at whether they have been separate certificate, whether they have been properly lodged, and there is a format under which you will be giving what are the claims beginning or at the beginning of the year, how many of the claims submitted during the year, how many claims have been accepted, how many claims have been rejected, what are the number of claims at the end of the year, which is the closing balance. So you would have to give a reconciliation statement. Then in respect of the NPA, the valuation certificate have to be obtained. Whatever the primary collaterals are there, the valuation certificate becomes invalid once in 3 years. So every 3 years the valuation certificate has to be freshly obtained in case of an NPA accounts. And in case where the cases examined by you, the branch has complied with the recovery policy prescribed by the controlling authority with respect to the compromise and the settlement scheme. And the details of the compromise and settlement scheme or write-off cases involving waiver more than 50 lakhs. You would also find the cases where the branches undertake the how we get in the amnesty scheme in the service tax GST, where sometimes the past one is waived off. Similarly, branches run the amnesty schemes to regularize the loans, and the borrowers have a choice and they will have a conditions for these amnesty schemes. Those who are availing this amnesty scheme, you have to have, if the write-off or the settlement is more than 50 lakhs, then you have to do a 100% verification of those accounts, what has been the application made by the borrower, whether the borrower was eligible in that scheme and has it been approved, or is it a suo motu taken by the branch manager. Generally, these are also done by the internal audit, concurrent audit. Still, you have an obligation to report these accounts. And major deficiency in credit reviewing, monitoring and the supervision has to be reported by you. So that is all on the review, monitoring and the supervision. And the last point in the advances is in the non-fund basis, which is the guarantees and letter of credit. So what is the obligation for you to report in the guarantees and the letter of credit is wherever the guarantees have been invoked and they have been paid. So guarantee has been invoked. So to whom the guarantee has been given, they have invoked. But the borrower again, he has made the payment, but the adjustment is not done. You would be giving each borrower wise when it has been invoked, who is the borrower, who is the beneficiary, how much amount has been invoked, and what is the recovery. If it is invoked but it has not been paid, you will again give the list of the guarantees which have been invoked. Maybe they are under the discussion and the borrower would have said, okay, I would make the final settlement, but you would have to ask the question and report it. So there is a separate register which the branch maintains, the guarantee register, and the loan file of the borrower would have any correspondence with regards to the guarantee would be filed in the loan file of the borrower. So you have to pick the non-fund based wherever the guarantees have been given, you have to pick this and ask the questionnaire. And the details of the advances in case of the letter of credit, similar to the bank guarantee, you would have the letter of credit and the co-acceptances funded by the branch at the end of the year. You have to give each party wise a separate reporting expected. Broadly, what would be your audit approach when it comes to your renewals? You will be looking at the ODs which have been not renewed. And what is the time period within which the OD has to be renewed? 1 month, 2 months, 3 months. If it is not renewed for 6 months, it becomes an NPA. Short renewal in the OD account, which is short, it is called a short appraisal in the OD account, is permitted. So short appraisal is done. So whenever they cannot do the renewal, short appraisal is done. So you have to again check whether the short appraisal is not has finalized into the renewal. Generally, renewal would be pending because branch manager is not convinced the sufficient DP or the stock statement is not available, or the unit has become sick, so he do not want to take a risk of renewing it. So they would do a short appraisal, send it to central office. So wherever the accounts you are seeing that the renewals are not happening, the appraisals are not happening, then it is a case of the special attention. Beyond, so the classification in reporting is renewal not done between 6 months to 1 year, renewal not done more than 1 year, you would be doing it. You would have to specifically read the stock statements and the book statement, book debts submitted by the branch. To the branch you would have to be doing a separate reading of it. Then we have discussed that non-fund basis also to be verified. In case of the corporate, non-corporate loan amount more than 10 lakhs, it has the account of the borrower has to be audited. Generally, you would find the borrower would not get audited their accounts because the tax audit limit is different. The borrower might not reach the tax audit limit. So these are the cases. Again, you will technically find the deficiency. I have also noticed that most of the the LFR saying as nil or complied with. You need to have an underlying statement saying that if it is complied, which are the non-corporate accounts you have seen where the outstanding is, the loan amount is more than 10 lakhs and you have looked for the audited financial statements. So wherever the loan amount to a borrower outstanding is more than 10 lakhs, it is mandatory they have to get their books of accounts audited. Whenever the branch is verifying the stock statement or inspection, they have to write in their physical inspection report, there exists an inspection report. You have to verify whether there is an inspection report, whether the branch is verifying or not. So you have to do this aspect. So as I said, the advances monitoring and reporting LFR would generally take a half a day time. So you have to plan what would be your questionnaire, what questions you will ask, and how would you fill in this respective point in the LFR. So we have looked at all the up to points in it. Okay, then comes other assets. So the last point in your assets is point number 6, which is other assets. Other assets have two items. One is stationery and stamp. So in the stationery and stamp, the questionnaire is, does the system of the bank ensure adequate internal controls and the issue and custody of the stationery comprising the security items? It could be term deposits, FD, checkbooks and everything. And did you come across any missing items? The second point in other assets is sundry and the suspense accounts. So So does the branch has a process of clearing the items which are debited into sundry assets or suspense accounts? And if it is not, is your test check identifies more than 6 months? And if so, you have to report year-wise the amount and the remarks. So from your audit perspective, your auditor approach should be, you would have to obtain the schedule of the stationery item. You should ask what is the stationery the branch has. Generally, one of the item in the balance sheet is consumables closing stock. Whatever their checks or FDs, whatever the value of those, they will value as some closing stock, and they also carry some inventory. So you have to verify what is the value which they are carrying and whether they physically exist. And checkbook, they would also have a register for fixed deposit, open checklists or term deposits. They would have a register, what is the starting serial number, ending serial number. You have to test check and say whether they exist or not. When it comes to the sundry and suspense, you have to get the underlying line items. A classic example which I can give is, see under, forget CBS, if I have to give a simple example, say in case of your books of accounts which are maintained in a simple ERP like a Tally or any other ERP, and when you are doing an audit of a debtors or creditors, how would you do it? You will open that particular customer account, and when you open the customer account, you will see around 500 transactions and the closing balance is around 74,000 rupees. Now, how would you audit? The first thing you would do is you will press say Alt B and try to see what are the bill wise outstanding. You will see, okay, how long this value which is outstanding for. Now if it is 74,000, so you will see what are all these bill wise outstanding. Similarly in CBS, not like your advances account, every item in your balance sheet will have a line balance. So the ERPs are designed to have like equivalent to your bill wise, every ledger which you are seeing, you would have a line wise balances. So your question is, the list of items which you are seeing in the sundry and suspenses, you should ask for the line balances. And if the line balances could be of two types, if the line balances is not adjusted for, like similar to your accounting, when you do not activate the bill wise or when you do not adjust against bill wise, you will find some debits, some credits not knocked off, or you will find it as on account. Similarly, you may find even in the CBS ERP, whenever you are extracting a GL and the GL is having the line balances, you have to take the line balances into a pivot and see what is the age of it, how long these have been not offset. Some of the sundry or the miscellaneous asset is like your rental deposit. You know that these deposits, these are the deposit, you will be looking at the deposit account, rental agreement, and you will ensure whether that is correct or not. But most other items which are sundry and suspense, because typically if you see a balance sheet, other than advances given, deposits accepted, and the difference being with the cash and bank balance or the inter-branch, technically branch should have no items in the balance sheet. So if there are any other items which are there in the balance sheet as an asset, you have to verify those assets and see if these line balances in those assets exceed 6 months. You have to specifically put it in your LFR. And as you are reporting it in LFR, there might be a point that, okay, some points need an MOC. For example, the branch has done a check purchase and it has sent for the collection, but it has not been attended to. Or there is a foreign currency which has been submitted and the customer has discounted, and the foreign currency has been sent to the head office or a chest which has not been attended to. It might be an issue as you identify the sundries, there are expenditure which has not been provided for, or there is an advance given for an event which is parked in the sundry and it is lying for a long period which has not been provided as an expenditure. So you would find when you look at the line items in these sundries, whenever these line items has not been attended for and for a longer period, it becomes a need for a qualification or a provision. So those are the broad items on the assets. So as I said in the beginning, LFAR would take little longer time, and majority of the LFAR covers on the advances, and of the advances it is on review of the supervision of the whatever the loans which have been given. So review, monitoring and supervision of the loans is a major item in the LFR. So it is the time for the tea break. We will take a break for how much time? So we will have a break for 30 minutes and we will assemble back to continue with the other aspects of the LFR tax audit report and certificates. Welcome back from the break. The next thing on the part 2 LFR is liability. We just completed only one part. Your liabilities, P&L, miscellaneous. So on liabilities, the first thing to be covered, there are two aspects in liability. One is deposits. The second is other liabilities, bills payable and sundries. So on deposits, there are three questions to be answered. The first, have the controlling authorities of the bank laid down any guidelines with respect to conduct of the operations in inoperative accounts? So there would be a circular for inoperative account, the definition of inoperative account, and in case if a transaction is happening in inoperative account, how it shall be happening. It's not that the account becomes inoperative, it can never be operated. Customer would have traveled abroad and is not using the account for a longer time. Possible. And when customer comes back and does a transaction, it might need a special approval, special permission of the branches. So under report section of the CBS, when you go to deposits related reports, you will find list of inoperative accounts. You can choose the transactions which happened in the inoperative accounts, or in the exception reports you will find transactions in inoperative account. And if you extract that voucher, you will find the manager would have specially approved those transactions. Right, so that is one audit you have to do it. Next question is, after the balance sheet date until the date of audit, are you finding a divergence? Is there a possible window dressing? Is there a mobilization of advance deposits which is happening? Is another question you will be answering. So generally, any clients, if you ask what is the business of a client, you would say so much is the turnover, that is called as a business of a client. But when it comes to the bank, when you ask what is the business of the bank, it is not neither the interest income or interest expenditure. The exposure they have, the advances they have and deposits they mobilize is treated as the business of the bank. Now, based on the business of the bank, the number of staff get allotted, the number of the scale of the branch manager is different, various other things gets linked. Imagine a situation where a borrower has a loan of 5 crore sanction and his outstanding is 3 crores. Alright. So the business of the branch would be treated as 3 crores. But branch manager calls him and says, okay, can you do a deposit of 2 crores for a temporary period of 1 week? Anyhow, you have the balance limit which is unutilized. So they enhance they ask the borrower to utilize the entire 5 crores and the 2 crores is put as a deposit. So suddenly the business of the bank, from 3 crores it is becoming 7 crores, right? So the bigger the business portfolio, that is how they would be looked at. Now as a part of an LFR, you are also expected to see whether anything of that sort is happening. And one easy way of doing it is you take the outstanding of the deposit position on 25th September, 30th September, 5th October, 25th November, 25th December, 31st December, 5th January, 25th March, 31st March and 5th April. Just call out those numbers, put it in an Excel spreadsheet and just select it, put a graph, you will automatically see a trend line. And if on those reporting dates, if you see a spurt in that, and that indicates that on the reporting dates the branch is trying to indicate to increase the deposits to mobilize and see that they are having a better rating. That is kind of possibly window dressing and not permitted. If you find anything of that, you have to report it. And if there are any overdue matured time deposits at the end of the year, if so, the amounts thereof should be indicated. Generally, the overdue matured deposits before the maturity, they will talk to the customer and renew it. In case if it is not renewed, the interest thereon is generally dealt at the head office. Interest needs to be provided even on the overdue and mature deposits. I have deposited an account, say sum of 1 lakh with State Bank of India MG Road, and 1 year over, I did not go to the bank to withdraw the money. Just because I did not go to the bank withdraw the money doesn't mean that I will not be paid interest. RBI has given a guideline saying that if the deposit is matured, a minimum interest rate of whatever which is paid to the SB account, the same needs to be extended to the FD account also. So if there are any overdue maturity deposits, you have a report which you can be generated in overdue maturity deposits. If so, you have to list out the number of accounts and outstanding thereon. So from the audit approach, you review operations in an operative account, unusual movement of the balances in the year end, and reporting of the overdue maturity deposits. The second items in the LFR liabilities is the bills payable and sundry deposits. There are again two questions in the bills payable and sundry deposits. First, the number of items and the aggregate amount of the old items pending more than 3 years or more to be obtained from the branch and reported under appropriate head. Does the scrutiny of the accounts under various subheads reveal old balances? If so, give the details of the format. So say year, number of items, the amount and the remarks. So you will be looking at like sundry assets, you will be looking at sundry liability, other liabilities. You have to see what are the line items of it. So you look at the ledger, ask for, so there is generally in the report section you will call minor subsidiaries reports. So where that will carry the line items, or it is like a bill wise outstanding report. You will see the ledger wise, bill wise, the account wise, bill wise, which you will have to see what is the age of the line items in these bills. If there are any unusual items in these things, you have to report it. Alright. Then the contingent liabilities. There are items in contingent liabilities which is guarantees, letter of credit, acceptance and endorsement. So the question to be asked is, are there any contingent liability which is not acknowledged as debt by the branch? So whenever a bank guarantee is issued, whenever a letter of credit is opened, as you are signing the balance sheet, you will be signing the balance sheet both for fund based and non-fund based. So non-fund based is also on the face of the balance sheet, just below the total. So much are the contingent liabilities. You have to ensure for the two things. One, there is a contingent liability which actually lapsed and it is still continuing and they have not removed it. Or there is a letter of guarantee or a BG, LG which is issued and it has been not reported, routed through advances module. Like the classic case where we had that SWIFT, where the SWIFT have been, which is outside the CBS, which is not integrated. So there have been guarantees which have been issued but not integrated. So in your view, if there are guarantees which is issued and not forming part of the balance sheet, you have to report it. So you will be finding out from the records whether they have a proper control on reporting of the contingent liabilities. And if there are any cases filed against the branch, that would also be a contingent liability you should be aware of. If there are litigation cases pending against the branch, it is not, I am talking about the cases where the branch is filing on the customers, but there is a case against the branch, that also have to be collated and reported. Then moving on to general items. In general, the books of accounts, okay, there is an item on the P&L account. P&L item is, you would have to do a test check of the interest application, whether the interest for which the loans have been given has been properly recorded or not. So you would be looking at the sample check of the interest for the loans given and what is the loan on the sanction ticket and what is the interest rate mentioned in the CBS. Then on books of account, in general you have 6 different questionnaires. So the first of it is the books of accounts. So you will be commenting on the quality of the books of accounts which are being maintained and have they been authorized and are they printed regularly and what is the extent of computerization, are there adequate internal control and security measures, is the branch taking backup, and do they have contingency and disaster recovery plan, and do you have any suggestions in improving the system? Answer to all these questions, you would say yes. Branch manager would say, sir, it is computerized. We don't take any printouts. everything, the reports gets pulled into the system. We do not take any backups. Backup is taken by the central. We do not do any disaster recovery plan testing. It is done at the central office. So, are there internal controls deployed? We do not have, I do not have powers to post a transaction, nor a cashier has a power to post the approval of a transaction. So the controls are built into the CBS. There is nothing else I can do. That would be the answer from the branch manager. Now this is the question, that is the answer. What would you be your comment to this? Would you write yes, no, nil, not applicable? As informed by the branch manager, everything is taken care of. So you should first take this in the management representation letter. If the branch manager is saying so, you have to take it. And you have to report as informed to us. There is no backup method at the branches. You should say there is no backup method at the branches. We are informed backup is taken by the central office. There are no internal control testing in the branch. It is inbuilt into the CBS. There is no disaster recovery plan which is done. So you have to report it accordingly. You cannot say yes, everything is taken care. No, it is not complied with. So you have to do an inquiry into it by asking the questions. And if there is any systems audit, you ask, is there a systems audit? If so, please share the systems audit report. If not, you report that there are no systems audit report, hence it cannot be commented further on this. The second point in the general is reconciliation of control and subsidiary books. Now, CBS or a ERP environment works in a concept of primary books and subsidiary books. Like if a simple ERP like a Tally, there is nothing called primary and subsidiary books. A customer is also a ledger into the trial balance. Your debtors or creditors is integrated into the trial balance. But generally in an ERP, the debtors and creditors, which is advances and the deposits, they are all subsidiary books. So the transaction to the ledger gets posted from the subsidiary book. So if you look at the trial balance of the branch, you will find the loan account. Now loan account will have an account number. When you open that loan account ledger, you will see transactions into that ledger. It is summation of all the debtors and creditors, which is all the deposits and the advances. So corresponding balance of this debtors and creditors would be there in the subsidiary books, which is all your advance master and the deposit master. So you have to comment whether the advance master and deposit master is it matching or not, which is your general ledger balance. You will be reporting the GL code and the subsidiary. If it is not balanced, if it is not matched, what is the last date at which it is matched? Now, from the audit perspective, see, in a CBS environment, it matches. If it is not matching, you should know that okay, there is something wrong where you have generated the report. Because firstly you have to see which is the trial balance you have generated. Is it before closing or after closing? When we say before closing, it's not that they have not closed the books. It is before a debit to the customer account or a credit to the customer account. Because when the interest is processed by the system, it calculates the interest and it accrues and parks into the interest ledger. The interest module does. Then when you apply that interest, wherever the interest is due, accrued and due, only then it gets posted to the customer account. Till that point it is still accrued and parked into a separate ledger. At what point you have generated your trial balance and what is the report you have generated as on 31st March, detailed customer wise, you have to take a look at it. 99.99% it would match. When it would not match is if there is a manual posting into those primary books, which is the debtors control account or a creditors control account, which is customer advances master or a deposit master, if there is a manual entry. Or if there is any manual entry which is not correspondingly posted, it would happen. Now you may ask a question, how can there be a manual entry? CBS would have an internal control. Of course, CBS would have an internal controls to the extent of not posting a manual entry. But if some charges or anything which is recognized and posted to it, but not done a corresponding adjustment entry, then you might find a difference to it, which you have to quantify. So the way you have to do is, there would be a report called minor subsidiaries ledger. So you will be, which is the loan trial balance. So it could be OD trial balance, term loan trial balance. So there would be a loan trial balance as on 31st March. You will extract that loan trial balance, which will give the customer-wise listing. The sum total of it should tally with your balance sheet item, and you would be reporting. In case if there is any deviation, there is a format in which you have to report. You would be reporting it. Next comes inter-branch transaction. In fact, this is one of the bigger item in your balance sheet. If your balance sheet is showing 150 crores, 160 crores, your advances is some 30 crores, 40 crores. The difference 120 crores is interbranch. Bank has collected 180 crores deposits. They have lent some 30-40 crores to the borrowers. The rest of money is where? That has gone to the head office account. So my balance sheet will have a major item in the balance sheet called head office and interbranch. Now, most of us we say, okay, it is a head office account. You ask the branch manager, sir, it is a head office account that I do not do anything, it will automatically reconcile. There is a thing called automatic reconcile. It also has to get reconciled. So the question is, firstly, that the branch forward on a daily basis to a designated cell the statement of debit and credit transactions. So branches will do a debit and a credit. Branches post transactions into those ledger. Like I have deposited my cash from this to some central chest account, or I have received some checks or DDs for purchase and I have to transfer I have paid it to the customer, but I have to collect it from the other branch. Or if a customer of a different branch doing a transaction here and which I have to transfer the entry to the respective the branch account. Or if it is a transaction of the payments, pensions and other things which are paid to the pensioners and other things. They are not the customers of the branch. I have paid them, I have debit to the head office account which they would have received the pension from somewhere and it would knock it off. So there would be many transactions which would happen manually created by the branch manager which should get correspondingly knocked off. So even head office or interbranch account should get reconciled. You cannot take an assumption that it is an interbranch account or a head office account. It will automatically match or it is outside purview of my audit. There are two things we should look for. Firstly, again the line items of that, you should see whether they are recent line items, because the moment an interbranch account is created, the other branch has to correspond to it and knock it off. Or do you have a confirmation of balance? Like head office has issued a certificate as on 31st March saying that in my books of accounts that this is the branch balance and it is matching. So in the absence of an external confirmation or on scrutiny of the 31st March balances, you are not suitably satisfied with the balance, then you should definitely qualify in your main audit report that necessary information and explanation for the audit has not been obtained, and you have to give it in your LFAR stating that the head office accounts are not showing that the accounts are not in agreeing with the head office balance. So these transactions have to get correspondingly matched. If it is not happening, you have to report it. You have a 6.2 question. Basically what you have to do is you have to obtain a confirmation of balance. There will be an MIS report that gets generated which will be submitted by the branch to the head office or vice versa. Or there will be a report. If there is not reconciled, there will be a report. So wherever there is unattended entries, so you have, if there are debit balance and which is pending in the interbranch, provision needs to be made. For a long time you are seeing it is a debit balance in the interbranch, maybe some provision is missing that needs to be provided for. So you have to call for an MOC also if need be. Definitely it would come a point in your LFR. Then comes the general aspects, audit, inspections and the fraud related. So if the branch is covered under the concurrent audit, so or any inspection, so you will be reporting is the branch is covered in any of that. You will be asking the first question you will be asking the branch during the audit is what audits have undertaken, is it covered by RBI audit or revenue audit, H audit, branch audit. You will be asking these questions. And in framing your report, have you read those reports? This is a specific question. You have to read those reports. If there are any questions which have been critically commented, have you looked at those points, and are those points are still persisting? Still the branch is having those deficiency. So you have to question that, okay, I have reviewed this thing, reviewed the accounts. If there are any negatively qualified accounts that have been whether rectified or not, you would be reporting it. Again, the answer yes or no, you have to have a working paper saying that yes, I have read. So maybe in the same, if it is an Excel file where you are reporting your LFR, maybe in the next column of that you can write your observations or basis which you have come to a conclusion, or you can insert a comment and say on what basis you are coming to your conclusion. The next point is the general item is a fraud. So during the year under the audit, are there any frauds? and if there are any frauds which are happening, do you have any suggestion to minimize the frauds? See, trust me, in those 4 days we cannot find any frauds. And the best you can ask is, manager, are there any frauds happened? Obviously you will say nothing has happened. So you need not further question asking that, okay, please tell there are something happened. If it is not happened, not happened. Please point it in your management representation letter saying that no frauds happened. That has to be a basis why you are commenting that yes, there are no frauds. But if you find that there are any chances that the frauds can happen, say there is no security guard, or the ATM is there, ATM is completely unguarded, or the cash custody is not in the 2 joint keys, or it is in a remote location where there is power not there, or if you are finding a reason there are susceptibility for the frauds, then you should definitely comment on it. Or there are a lot of loans given in the customers which are turning into bad. So you have to look at the pre-sanctioning, whether the operations are done in a genuine way, or are there any transactions which are leading to the fraud. You are free to comment on it. And whenever you find a fraud value more than 100 lakhs and above, 1 crore and above, you have an obligation to do a direct reporting to the RBI. Okay. Then the last item in the LFAR is the miscellaneous item. The question is, examination of any accounts, is it indicating window dressing? And branch is maintaining whether fixed asset register. See, fixed assets are generally maintained at the head office. Irrespective of the head office maintaining in the fixed assets register in the head office, branch should have what is the list of assets they have. So branch should know, I have so many computers, so much furniture, so one steel rack, so they need to have a fixed asset register. So during your audit you have to see what are the assets which are there at the branch and what are the assets which are recorded in the register which is maintained by the branch. If you are finding an entry in the register of the branch not physically there, or an asset which is physically there not there in the entry of the branch, you have to again critically comment that during the thing I have found so many assets which have been scrapped. Some old computers, old monitors could have been scrapped and put it into some storeroom. Again, that is also like wastage of a real estate. So they are paying rent to keep that scrap also. That also you can comment saying that that has not been periodically reviewed and taken by the head office. On top of it, if you want any matter which as a branch auditor would you like to bring to the notice of the central statutory auditor, you are free to comment on it. Right? So this is your last point, which is if there is vendor dressing you will be reporting. If there is a fixed asset register, so there would be a register, though fixed assets, you will not find the fixed assets in the balance sheet. Fixed assets are capitalized in the head office. But there is a register which is maintained in the branch listing out what are all the assets that the branch has. So you will be commenting and additional points which you would like to bring to the notice of the central statutory auditors. So are there any additional points which you think should be brought to the notice of the central statutory auditors? Have anyone reported any item in that last 6 miscellaneous? To the branch management or anything, it is not just the central church. Do you want anything, do you want to appraise anything to the management? Have any one of you written anything? So I would recommend you should start writing it. And whatever you write here would be positively taken. They would look at what systems can be brought in. Like if you find it some kind of LC/LG is not integrated, automated in the system. Especially the sanction tickets are not automated. Do you think the sanction letters are computerized? They are not. They are printed on a Word document. And we know anything which happens in the Word document, what will happen? Control C, Control V. Sometimes you will find sanction terms. The loan is sanctioned as a term loan. One of the sanction conditions you will see periodical submission of the stock statement in the book dates. Because it was just copy paste of the thing. Or deposit of title deeds to be deposited even though when there is the primary collateral is not the any of those assets. So there are chances that could be error. Or the sanction ticket has some name and the system has some name because he forgot to correct it. Or the interest rate is showing X Later they have negotiated, changed it, they said okay fine, we will agree for so and so rate. But they forgot to correct on the sanction term and get it signed. But finally this is what it is entered back into the system. Again you have to comment saying that can the sanction ticket be generated directly from the system so that it can be avoided. So you are free to give any value added points to the branch based on your observations. Yeah. So this is all on the LFAR. Then there is LFAR has an additional reporting for the different section for the branches which is dealing in forex or very large advances like 100 crores and above, loans give loan value 100 crores and above, or those branches which are exclusively dealing in NPA asset recovery branch, or some could be a service branches, they are just a clearing house. So that has a separate audit report which is not covered. Some special points before we conclude on the LFA or move to the other thing is you please avoid these abbreviations yes, no, nil, NA. Try to give an answer which is a self-explanatory answer. Either avoid copy paste, or if you are doing Control C, Control V, please take a due care that the answers is deleted and you are writing the answers again. It is not an answer of your friend he has done in some other branch, you are copying, adopting, or the previous year LFAR answer you are copying and adopting. Please build your schedules, working papers for each point which you are reporting, yes, no, whatever it is. And most of your working papers can be integrated with the main audit report. We are auditing the advances, deposits, they are all linked with it. So the same working paper can be used as an observation for LFAR or a reporting point of your main audit report. And always carry a checklist of what you have to do, how you have to do, and after doing how you have to report. Have a preliminary, so have a printed LFAR and have whomsoever is doing whatever that observation, they should be appraised of what is that they have to do, what are the underlying documents they have to take, and basis which what is that answer they have to report. Have a preliminary discussion even before you start the audit. Alright, so let's move to the next aspect which is tax audit report and other certificates. Okay. I would say tax audit report, the less I speak it is good because I am not an expert on the income tax matters, and you've been doing the tax audit reports. There is nothing much difference of the tax audit report which you do otherwise and the branch, but however I have brought in some key aspects which you should be considering while you are doing the tax audit report. And you should know there are many things which are not covered in the tax audit report at the branch. And the tax audit report which is coming to you, either it would be pre-printed saying that these points are not applicable, or the tax audit report itself will be printed removing those points, only specific clauses applicable to you for reporting would get printed. So you will find the banks would be two type of the thing. So you will have a pre-printed tax audit report. So you have same main audit report and the 3CD. So the tax audit report certification, your 3CA, 3CD is, there is no difference between what 3CA you issue in your the regular thing and the branch. It is the same. When it comes to the 3CD, general clauses which are applicable are capital expenditure which is debited to P&L, revenue expenditure more than 20,000, or which is now it will be changed to 10,000, and deposits in cash, locker rent, commissions, details of TDS, where TDS deducted, not deducted, short deducted, filing of returns, and long-term loans and advances where the repayment is more than 5 years, where they get the additional deduction. So these are the points you will be getting questionnaire to fill in. So a couple of points for our discussion. First is on clause 13, method of accounting. So you will have to report whether there is any change in the method of accounting, and the method of accounting adopted by the bank is in line with the ICDS. So the accounting of the transactions it is on accrual basis, but for some items it is on cash basis, which is NPA and the locker rent. So locker rent for the purpose of books of accounts it is on cash basis. But for the purpose of tax audit, it is on accrual basis. So you will do a recomputation of the locker rent and you will be giving it. Now there is a second question which comes is there a change in method of accounting? So in the closing circular which is sent to you, they would mention accounting policies is deviated from the previous year to current year, if any. You will find a point in it, and if you are finding that there is a change in accounting policy which is there in that, you would have to report it. So you have to refer your closing circular to report this point, but generally the accounting policies is defined at the bank as a whole, not at the branch level. Whatever is the bank accounting policy is applicable to the branch also. So the change in accounting policy generally does not occur. In case if something is happening, in the closing circular it will indicate this is the change happened, and owing to the change so much is a quantification. How do you generate the quantification report in the CBS? They would be giving a report code that okay, this is a change. Maybe they have changed the depreciation, or they have changed the method of allocation of the overdue money received from the customers. So there may be change. If I have received money from a customer where the account is an NPA, how do I appropriate? Would I take it to principal? Would I take it to charges? Would I take it to interest? What is the policy? An account which has become an NPA, I have received money from the customer, my outstanding balance is say 25 lakhs, I have received some 3 lakhs. To where I have to appropriate? To the charges, to the principal, or to the interest?
Charges first.
Charges first, interest first. Any other answer? Principal first. Now, it is a policy of the bank. There is no set guidelines from RBI that you should appropriate this to income first or the charges first. Banks would have their accounting policy. Now they might change this policy from time to time. If they have changed any policy, accordingly their income recognition would have an impact, so that needs to be quantified. So generally, if there are any changes in policies like that, it would be mentioned in the closing circular, and it would also say which report in the CBS where the quantification is computed, and it would be reported. Next, clause 8, depreciation. So as I said, the depreciation is computed at the head office, but however, wherever the assets addition happened during the year, you would have to check for the bills and say, well, yes, the assets have happened during the year, and you have to see whether there is an entry in the branch. So branch has the list of those assets or not, you have to check, because there is a depreciation which is being claimed. Next, on the employee contribution, so you have a reporting clause 20, employee contribution. So the amount received from the employees towards the PF, and what is the due date of payment, actual amount paid, and the actual date of the due date for payment to the authorities. So the normal reporting which you do in the tax audit report, this needs to be reported. So branch manager would give the copies of the challans and you would be reporting it. Then capital expenditure versus revenue expenditure, anything pertaining to revenue, whether it has been capitalized or vice versa, or anything which is a capital in nature, whether it has been charged off to the P&L or not. So whenever you are doing a general review of the charges in the P&L, so leaving interest income and interest expenditure, so you will be doing an audit of other charges income or other expenditure. So major expenditure in the branch other than interest would be salary income, rental income. Then the electricity depends on the location and other things. So or the DG or whatever the things. So when you do a general scrutiny of this expenditure, you might have to look for, are there any expenditures where computers have been upgraded or interior decorations have been done. So the uplift of the branch happened, or then branch has purchased some new vehicles and the one-time road tax which is paid, or they have purchased some telephone instruments. So whether they have charged it off to miscellaneous items or whether it has been capitalized. And this is a general analytical audit. So it would be left to the management policy on charging off, and again in the auditor view whether or not can it be charged or not, you would have to report it. Okay, expenditure incurred at the clubs, it would not be applicable. Next comes the TDS disallowance. So clause 21, you would be reporting the tax deducted at the source. It is generally captured in the system, and the system also has a facility where a borrower submits, a senior citizen, someone submits that they are not into the limit of the TDS, they can mark it into the system that TDS is not applicable. So you have to generate a report wherever the deposits made and the TDS is not charged. You have to see whether they have taken the necessary declarations from the borrower or it has been missed out, has it been erroneously marked in the system or not. And if you're finding any divergence in it, you have to report. And this is not just the interest, if there is a rental expenditure or any other expenditure. So one is the interest is the main expenditure. There are other expenditure, you have to do a scrutiny where the TDS applicable which has been deducted. If deducted, whether they have been deducted, if there is a short remittance or a timely remittance. Again, the issues could be AMC, interest, rent. See, the branch managers might have not been appraised of the TDS provisions, they might have not done it. Or the valuations which are given, valuation reports or any other things which have been given, they would have done under 194C, but ideally it should have been 194G. The professional charges 194J. Now, whenever there is a wrong head, it doesn't call for disqualification, disallowance of the expenditure, but you have to report it as a short deduction. And if there is any provision made without deduction of the expenditure, you would have to take a special reporting. You might find the interest on the savings account and the non-resident accounts which have their balance TDS, but generally it would have been remitted net of TDS, so you have to see if there are any instance of that has to be reported. Now, clause 34A is a clause which we know it has come 3 years back, which would be warranting expenditure-wise reconciliation of the P&L vis-a-vis the TDS deduction. It is equally applicable for the banks also. There is one CBDT circular on the fixed deposits which have been made by the courts and other things. Registrars, TDS is not applicable. Again, there are some decisions where the building is jointly owned by the two co-owners. So the limit of the applicable TDS is applicable to both the co-owners. Wherever the processing charges which is paid by one bank to another bank, the TDS is applicable on the processing charge. There is one ITAR decision. Then we have a new reporting requirement on if any interest payment to MSME. So this is applicable to general where we are not paying money to the MSME in time and we have an obligation to pay interest. So the same clause is applicable to the branches also, but generally branches do not have any MSME defaults and they will not have any interest payment. But you have to ask any questions that have you paid any delayed fees to MSME and have you paid any interest for any purchases which has been made to MSME and paid interest on it. Generally it is no, but you have to ask a question on it and you have to put it as nil. Prior period expenditure, you have a specific comment on if there is any prior period expenditure which has been debited. Now, interest which has been debited to the customers pertaining to the earlier years upon audit findings, would it constitute a prior period expenditure? Interest has been recognized at say 2% for a FD. Ideally it should have been say 7%. Now that has been identified by the auditor and it has been recalculated and differential amount is paid now. Would it become a prior period expenditure? So the answer to this is if an expenditure is been passed through MOC. See, whenever an expenditure is passed through an MOC, the balance sheets of the branch is always frozen on 31st March. That is their 1st April, they take off to do the closing of the things. You cannot post any entry into the bank after 31st March. The branch cannot post any entries to that. Now those entries which have been posted into the bank after 31st March, say 1st April. Now you may say it is prior period. It wouldn't be falling as a prior period if an MOC for that has been issued. Whenever the MOCs are issued, they are considered at the head office of the balance sheet items and the respective entries are posted into the bank on a subsequent date to give an effect of that. So you have to see whether it has been MOC has been given or not and you have to take the decision accordingly. Then you have the 43B reporting. Now 43B reporting would be at a branch level would be applicable to municipal taxes or interest if they have to pay anything to SIDB or exempt, so where they have taken the funds. 99% of the cases when you do the branch audit, this clause would not be applicable. but the relevant expenditure for that would be this. So generally in case of a regular SSC, you look for the all the taxes, so you look for this. If it is not paid, then it is applicable. Then we have the clause 34, where we will be reporting the TDS on where there are three parts, where in the first part we will be reporting the total expenditure of the branch. That's how we report total expenditure of the client. Of the total expenditure, how much of the expenditure warrants for the TDS, and how much TDS has been done, and how much has been not affected. So this is a clause of the income tax audit report which has been introduced recently 3 years back. So this is applicable even to the banks. So you would have to report all the expenditure items and see whether TDS applicable has been deducted or not. And you will also give the reporting dates of the both 24Q and 26Q. So the acknowledgements have to be reported. And if there is any delay in payment of TDS, so the interest on the delayed remittances are also applicable. So you will have to report what is the interest on the delayed remittances. I know it is difficult to do a complete reporting of this clause in the bank, but you should have a test check evidencing saying that this has been complied for.
How to quantify?
Yeah. So whenever you identify, okay, the good question we have is, if I have a case where I identified that okay, TDS has not been deducted. Now if it is of a general charges, you can definitely calculate that like rent has been paid and TDS is not deducted. You can quantify it and do it. But you identified some customer's account where the interest has been paid, it has been marked as TDS deducted not applicable, and technically TDS deduction is applicable. Maybe it is a corporate account and other accounts. Now how can I quantify that so much TDS is not deducted? So wherever you cannot quantify, that is why you have a similar point for equivalent to this in your LFR, where you will be reporting these are the things which have been observed, and the quantum of the TDS deduction is not applicable. You will be recommending for a systems audit in that case. The next important thing in the branch audit is certificates. Now the certificates which are issued, these certificates are beyond our audit report, beyond main audit report, beyond your tax audit report. In fact, our tax audit report is also on certificate. But key certificates, if I have to talk, is the Basel certificate or the long outstanding sundry suspense, bank guarantee commission related workings, interest subvention related certificates. So these certificates are issued to the branch, not this. The list of the certificate you will be issuing is actually more. I have given the illustrative list. Sometimes bank specific would have additional certificates also. So in your closing circular, they will give what are the list of the certificates you have to issue. Like here we are seeing some 15 different certificates into 4. So each certificate is given to 4 different people. So one copy is to you, one copy is to the branch, one goes to the inspection, one goes to the head office or the circle office, whatever the designated cell. So the certificates are divided into the various things. Now what is that you should know about certificates? If I have to ask you a question, what is that you should know about your certificate? What is that you should know about certificate? You know the certificate title is here. What should you know? What you should know about certificate? How to issue it? Nothing to do. It is pre-printed. With the numbers, it is pre-printed. It is a system-generated certificate most of the times. Now, do you have a choice? Can you say I will not sign? You do not have a choice. You have to sign it. But you have an option to qualify. If there are any changes, you have an option to quantify. Sometimes you will be passing an MOC for the certificates also. You will be passing an MOC for the certificates also. And you are certifying something. You should really know how you have to certify. What are all the things you should be taking into an account before issuing the certificates. So I will be discussing on the key certificates. What are the certificates? What should be your working papers towards the certificates? First, demand and time liability certificate. So as an auditor, you have to certify that RBI statement has been submitted to the branch on the notified Fridays, so they will give 12 Fridays in accordance with the day book trial balance of the branch. So as an auditor, you have to certify the cash and bank balance reported to the RBI on the relevant odd dates in the specified format. They will give those dates. It's a pre-printed certificate. You will not have anything to fill the values also. You will only, in one page, top you will make one signature, down you will make one signature. What should be your audit workings for this? Earlier, the branches used to generate the certificate manually and submit it to the RBI and the controlling authorities. In fact, those who have done the audit in the manual era, where there are a lot of manual things, the CCODs were maintained in a manual register, interest was computed using calculators, the NPA certificates which is to be issued, they would be like as length as this and almost this height, which will be into green color, pink color, blue color, 4 different colors. And the biggest thing in that the audit would be tallying the numbers. If the certificate number, trial balance or the 2-3 certificates would be there, if the certificates are tallied, it is as good as the audit was complete. That's the kind of the challenges it was. Now today all the certificates are system generated, nothing is manually prepared. So when things are generated to the system, your audit procedures would increase further, right? So when for this certificate your audit working would be on those dates you have to generate the closing cash balance. You have to generate the closing cash balance. Then you have to go to the cashier cash scroll, take the cash scroll, see on those 12 dates whatever is the balance of the system and the balance of the cash scroll, is it matching or not matching, is what you have to check. Next, the serious irregularity. So you will issue a certificate on serious irregularity saying nil. So anyone have you issued any certificate on serious irregularity till date? So serious, if you find anything, transactions of fraud or transactions which are susceptible to fraud, or it's a foul play which would eventually lead it to fraud. If you identify any of those transactions similar to that, you have to report it in your this certificate. And if the value of the fraud or the transaction which will leading to fraud is exceeding 100 lakhs or 1 crore, you have to do a direct reporting to the RBI. Most of the times this is nil. Given those 4 days, we will hardly find any transactions of the fraud. But however, you should ask an inquiry to the branch manager, anything happened like that, or is there any cashier which has some cash mismanagement happened, or anything. You should ask a questionnaire and say, okay, on inquiry it is become nil, so hence you have to report as a nil. Or if you are finding during the sanction, when you are doing an LFR, when you find pre-sanction, the credit appraisal is weak, and you are finding that the loan sanctioned by this manager is turning into NPA owing to non-obtaining of the correct relevant document. This is a transaction which is leading, it's a foul play which is leading to a fraud. You have to report it on serious irregularity. Or this is a bigger branch and you are noticing that there is no concurrent audit, there is no internal audit, there is no RBI audit, nothing is happening. Then again you should report that looks like there is a serious irregularity, that there is no inspection which is happening. Or you have inspection which is happening and all the inspection reports, 365 days, some are the audit which continues. So auditors will come, they will do their audit, they will give it the reporting to the head office controlling authority or branch. Branch manager has 100 other works. He says, okay, I give a damn about this report. I know my job is to sanction the loans and get the deposits. I am doing my work. And he would not attend to the observations made in that. So if you find that anything is of serious irregularity, you would have to report. Now if you are reporting it as a nil, you should have what is the considerations you have done. You have checked this, and you have also taken an MRL from the branch. So you are satisfied that okay, there are no serious irregularities in the branch. You cannot just give a nil certificate. In fact, there are many cases I have seen it is nil, but if I ask what is underlying transaction, yeah, it is nil, I did not find anything. So any audit without any documentation, it is as good you have not done the audit. Please trust me, tomorrow when something happens, what comes to your rescue is only audit documentation. So in the branch audit, it is a key that you build your audit working papers. Next is on the interest subvention. See, interest subvention is generally given for a specified sector, specified loans. Central government or the state government will announce all farmer loans we will give it 4%. Is a promise elections, no? Yes or no? Which means, is the state government giving the loan? They are not giving the loan. Who is giving the loan? Banks. Could bank give it 4%? Bank is a commercial bank. They are taking the money from RBI at 7%, 8%. Why would they give the loan at 4%? But the government promised crop loan, this crop, this sector 4%. So banks would, the customers would come and ask that, okay, I have been promised for 4%. So how this gap mitigated is the banks would lend at say 8%, 10%, whatever is the rate. The differential amount is collected as a claim back from the respective government. Now generally there are two types of subventions that happen. One, an incentive, so for the borrowers who have taken the loans which have been sanctioned, the rate of interest itself is reduced. But some borrowers, so the rate of interest generally may be 6%. But for some borrowers who are prompt in repaying the loan, then they will give an additional incentive for prompt repayment. Prompt repayment means, again you know the crop loans. So if it is a crop loan, short-term crop loan, in 2 crop seasons the loan has to be closed, or if it is in a long-term crop loan, the loan should not be overdue more than 1 crop season. Now they would also give the tractor loans and other loans, which are again some loans would qualify for the schemes. So you have to check 2 things. The first scheme, which is where the loans have been sanctioned during the year, you will be getting a report in the CVS, loans sanctioned during the year. And in the loan sanctioned during the year, you have to see whether the loans have been correctly classified or not. Is agricultural loans a priority sector loan? Yes, no, maybe? Yes. Are they eligible for these interest subventions? Yes. Now, this agriculturalist comes and pledges the gold and takes a gold loan. It is given to agriculturalist. Is it a priority sector loan? Yes, no. Will this loan qualify for your interest subvention? So, Sally saying end use. So, now a gold loan, you do not know end use is for crop. A crop loan, end use is crop. A gold loan, end use is a personal loan. So, though a gold loan given to an agriculturalist, it will not definitely attract a priority sector rate. It may not qualify for interest subvention. So, you got to see, it might be the borrower, you have to see which are all the accounts to which have been classified for eligibility under the scheme. Basis your certificate, bank as a whole consolidate and make a claim from the central government. If you are giving a wrong state government or respecting government, if you are giving a wrong certificate, which means banks are making a wrong claims. So your certificate is also very important, so you should have a proper workings to it. Next, in case if it is a loan has been promptly closed. Promptly closed means the money has been recovered into the loan account. So if it is a KCC account or anything where there is a renewal which happens, the borrower has to pay the loan, it has to be closed and he has to renew it to a new account. Only then it is treated as the loan has been closed. If a loan has been generally reviewed, renewed, appraised, rescheduled, that will not be qualified for a loan closure. You cannot include those loans for the qualifying into additional incentives. So you have to do as a part of the audit. So the system itself will generate, these are the interest subvention for, so basically you will find it for the agricultural sector and where you are doing tier 2 cities where there are agricultural crops which are being exposed, you will find these certificates. So where the system is generating regular incentive, additional incentive, you have to do your audit working saying that whether these are qualifying or not. Basically this is covered for education loan, agricultural loan, Ambedkar Central Sector Subsidy Scheme or some specified category loans. Those loans the interest subvention is given. So for the interest subvention, what you will be doing audit of? You will be doing audit of accounts which have been renewed, newly opened and also you have to see this incentive has been passed on to the customers or not. Whenever the incentive is received from the bank government, so the way the banks operate is, bank charge at a regular rate. They charge 7%, 8% a regular rate. After receipt of the money from the government, this is credited back to the borrower's account as a subsidy received. So you have to also check whether the subsidy ledger account is having a balance. See, it might so happen that the borrower is charged in full, borrower has paid the money, here account is closed, and the borrower is not transacting with the bank anymore. Then later the branch has received subsidy from the government. Now, should the subsidy be given to the borrower, or would it be an income of the bank? How will you know whether it has been given or not? How will you audit? You are saying that incentive passed on to the customers. How would you audit that? He may have savings. The question is, how will you audit? Yeah, so the question you have to look for is, when the subsidy is received, so the subsidy is generally goes to that SL, OTH, others, sundry liabilities, others, and from that account it would be disbursed. They would pass a voucher. From that account it would be transferred to the respective borrower's account. So you have to see that voucher and see which are the borrowers that have been credited for, and whenever the subsidy is received, there would be a working for the borrowers for which the subsidy has been received for. So you have to see during the year if there is any subsidy received and whether that has been credited, and generally balance sheet might look close. Balance sheet do not have SLOTH anything, it is nil. So you have to ask a specific inquiry to the branch manager is when all you have received. Generally 6 months once or 1 year once they would receive the subsidy. So you should ask when all you have received the subsidy, can I see that voucher, and to which are all the borrowers it has been which has been credited, can you generate that report? You should ask that report. You have to have this as a working paper for your interest subvention, because you are certifying that claim is correct and whatever the claim received is credited to the customers properly. So as a part of your working paper, you will have advances master and also the details of minority subsidiaries balancing report. Next is the locker rent. Locker rent, again, books of accounts, I said it would be done on a cash basis, but for the purpose of tax audit it will be done on an accrual basis. So locker rent, there would be a separate module. So this is again a timing differences. So every year on year there would be a locker rent which is excess recognized, or earlier excess recognized, now what needs to be. So you will compute what is the locker rent expected on an accrual basis. So there should be a working paper. Earlier it was done manually. Later they have implemented a separate system for the lockers where the locker rent module used to generate a report. Now it is integrated into the CPS. It will generate a report. What is the locker rent to be recognized on an accrual basis? There will be a separate report. Using that you would be filling in your audit report. Next is the Basel 3. Do we certify Basel certificate? Yes, no, maybe. How do we certify? Report is generated, we sign it. What do we need to do in this? This is again one typical technical question. Basically, this is a capital adequacy requirement thing. This is a journey which is we started with Basel 1, Basel 2, now we are heading to Basel 3. Ideally, by 31st March 2019, all the banks should have been complied with Basel. But now that has been extended to 1 more year by 31st March 2020. Now what does it generally say? It says that you need to have a sufficient capital adequacy ratio. State Bank of India has 10,000 crore deposits. I'm just giving a hypothetical number. How much loan they can give? The banking business is accepting deposits and lending money. 10,000 crores I have deposits. How much loan I can give? Some number you can say. So much seriousness. Up to 10,000 crores they can give the loan, yes or no? So, but the Basel says, see, there are loans which will go to bad. Right? If you are giving 10,000 crores, you will not get entire 10,000 crores back. There are some loans which are going back. Like NPA in the loans, can I have NPA in the deposits? Can I say 7% of my deposit holders, I don't know when I will give it or not. Can I say that? I definitely can't say that. Right? So, I have to have that buffer. I definitely have to have the buffer. How will I get the buffer? From where will I get the buffer? Is it by not lending?
Infusion of capital.
You should have the sufficient capital to that extent. Alright? So, the capital which has been decided is 9.25%, you should have the capital. But it is at the bank as a whole. Okay? It has got nothing to do with the branch. Like the example which I gave, the branch has collected 160 crores deposits, 27 or 40 crores has been given as loans, balance is with the head office. Now what did head office do? Head office would have given it to an agricultural bank. There the loans would have been some 60 crores, deposit might be 13 crores. It is not checked at the branch level, it is checked at the bank as a whole. Now, when it is checked at the bank as a whole, what is the expectation of you in certifying the Basel? Is you are certifying the capital adequacy ratio is correct. How is the capital adequacy ratio verified? Capital deployed to the risk weighted assets. Each loan will not go back. Some loans have a high tendency to go back. Some loans have a low tendency to go back. Like loan against fixed deposits. Can it go back? Unless otherwise I have given a deposit of 10,000 and the loan given is 50,000. They are partially covered. Right? NSC, LIC. If my surrender value is substantially higher than the loan given, can it go back? What is the risk associated to it? It is zero. I have given a loan to a real estate, a builder. What is he doing? He is constructing houses. Is there a risk to it? I have given a loan to a salaried employee for a home loan. Is there a risk? The risk is there. But the loan given to the builder, again, he is constructing 100 apartments. I have given the loan for construction. Versus this one salaried employee who have taken the home loan. Both the underlying assets are property. Is the risk same?
No.
Why the properties, both are the underlying property, no? Both the underlying properties, that house.
Earning.
Yes. See, NPA is not determined based on the asset being bad. NPA doesn't mean that asset is bad. It is like ability to generate income is ceasing. That is why again we have categorized standard, D1, D2, D3 and loss. So ability to seize income is, ability to generate income is ceasing. Now the same home loan given to a residential customer has a lower risk than the same loans given to the builders. Commercial real estate has different risk. Agricultural loans have a different risk. Unsecured loans have a different risk. Gold loans have a different risk. So, the loans have a different risk category. Based on the risk, the assets have been weighed. That is why we call it as a risk-weighted asset. So, we generate at a bank level capital adequacy ratio. So, the classification could go wrong is corporate versus non-corporate. Corporate loans have a different risk, non-corporate loans have a different risk. Capital market loans, I have given loans I gave you a loan for you to trade in the stock market, derivatives and other things. I gave you a personal loan. So even that will have a different risk. So your capital adequacy ratio is the total eligible funds divided by credit risk on risk weighted assets. and some have market risk. So you will apply different risk, operational risk, credit risk and market risk, and you will compute what is the capital which is being deployed in managing those assets. This is done with the bank as a whole. Now what is your duty as a branch? In branch you will not do this computation, but you will be certifying Basel. What should be your job?
Classification.
Yes, your job would be a classification. So the loans sanctioned during the year, you have to see under which category they fall into. So you will have one certificate, certificate which will be coming as Basel III Capital Adequacy certificate. Now there would be an underlying report. You would have a PDF document. If the commercial, the real estate classified as 25 accounts, you will see 25 borrowers. So each borrower is classified into different category, a product category and different category. So you have to do a random scrutiny saying that especially loan sanction during the year, you have to see under which category they have been classified. If you find that the classification is wrong, again you would be issuing an MOC. Now this MOC will not change your profit, but it is a classification change. Again you would be issuing an MOC. Again most of the times this certificate is thrown on the face. We think that okay, we have very little thing to do, but as a part of the audit we have to obtain the underlying assets classified, and you have to cross check yes this classification is correct or not. In your as a working paper you say I have checked these loans and the classification found to be correct, and you will anyhow not do a 100% verification. But those who are system savvy, those who can spool the reports into system, you can definitely have a higher chance of picking a larger sample and look at those classification, corporate versus non-corporate, market versus non-market. So those the categorization you can find it, and you say if there is any change in the classification, you can pass an MOC. Then comes sundry assets. So you will be issuing a certificate on the sundry assets. So whatever the items which are there in the balance sheet, so you will be looking at items in the balance sheet where the items outstanding more than 6 months, you would have to report it in the certificate. If there are no items more than 6 months as a sundry assets, you will be reporting it as nil. Inventory high value report. So as I said, the fixed assets are not capitalized in the books of the bank balance sheet. Branch balance sheet. The fixed asset register is maintained at the head office. So as an inventory high value report, the head office would be sending the details of all high value assets. So as a branch auditor, you would be certifying that yes, these inventory high value assets, generally they give more than 50,000 items, you would be certifying yes, these items exist in the branch. Now as a part of the certification, you would have to report if you find assets further more than 50,000 which are there in the branch asset register, physical register, but not finding in the high value report, there might be change in the fixed assets. So moved from one branch to another branch, the head office wouldn't have updated their fixed asset register. You have to suitably make that qualification in that certificate, and you. So generally, please do not do a blind signature of it. I'm not saying that you are doing it. You need to have underlying working. You might have definitely checked it, but if you cannot prove me that okay, have you checked it? If you say orally yes, I have checked it, which means you have not checked it. From an external as a peer reviewer perspective, if you cannot show your audit by way of a document, as good you have not done the audit, you have just blindly signed. That is how the external peer reviewer would review it. So these are the various certificates that would be issued. So one needs to be governed about what are the various certificates that are issued and what are the primary things one needs to take control of. So I have not covered all the certificates. The major important certificate which one needs to be cautioned about has been considered. Now we have covered LFAR, tax audit report and other certificates. So the floor is open for questions. I have completed the session half an hour in advance. So if you have anything to ask for any doubts or any other aspects that needs to be covered. The only point which I would want to mention again is the audit working papers. All the data which I am saying as audit working papers, they are available in the branch CBS as subsidiary report, minority subsidiary report. Those reports can be generated into a PDF file. Those reports can be generated into a HTML or a CSV file. Whatever the reports which are there into PDF, HTML, CSV, they can be converted into an Excel file. They can be converted into an Excel file, and these Excel files can be used as an audit working paper. Whenever the data is in an Excel, you have a choice of consolidating all the Excels into one Excel worksheet, sheet by sheet, or you can create multiple Excel worksheet. Now you can create on the top of it saying one index file. It could be a Word document. Ideally, I would recommend Excel as a working paper, because something which we all know, which we all can use. So use the Excel as the index sheet, and in the Excel you can give a hyperlink. You have 10 different reports, you can give a hyperlink to 10 different reports. LFAR is also there in an Excel. Sometimes in the Word document you will also have an LFAR in an Excel. Put that LFAR in the Excel. Next to that observation, you can insert one more column called the working. You say working X file number so and so, or the sheet so and so. You can give a hyperlink to the file which you have done to the respective folder in it. See, it is not the question of the observation now or explanation now. 3 years later, 5 years later, when there is a question asked, or there is a new account which has become an NPA. See, suddenly when one account becomes NPA, now first question would be asked is, okay, who is the auditor? Something happened is like as if the auditor has sanctioned, and the thing, it is obvious. If something goes, if a fraud happens somewhere, the first question someone will ask, or media would want to knock your door and say that, okay, we would want to take an exclusive interview as to how you have verified what is the document you have done it. So you would need to be having a special care in proving that the assets which have been audited by you, whether it is the loans and advances, sundry assets, the recoverability of those assets are very important, and the certificates which you have made, the working papers of those certificates are also very important. So is there any doubt anyone has on how to use the certificates, how to report it, or any other points on the LFAR, anything specific which is not covered, or anything you have a doubt in LFAR? So we have some time to discuss. Or any point during LFAR while you are reporting, you have you think that you missed out something and you would want it to be considered. Anyone has any questions? Now, the silence indicates that, okay, everything is so simple that you have understood. Or this is something, a theory session as usual, too much theory and too much boring to be covered. So let me tell you what I have not covered so that you can definitely make note of it. So LFAR has the specialized branches. So branches for forex transaction, asset recovery branches. So I have not covered the points on it. If any of you are getting a branch of that, you should be taking a look at those points. The next thing which I have not covered is the long form audit report, the special advances or the additional advances in the long form audit report, where there is a large irregular or critical advances. In case of large critical these advances, there is a questionnaire which is running into 25 points. For each loan where the outstanding balance is more than 5% or 2 crores, whichever is lower, you have to have a detailed reporting. It's like this is running, so all this is 7 pages. So for each borrower account, you would have to do a separate reporting of it. You have to budget additional time, and before even start, you should give, the branch manager also has a copy of it. You should ask the branch manager to have this filled. If the branch manager is filling it, then it is half a day job for say half an hour work for you to verify. If the branch manager is not filling and you have to fill it, then it would be a half a day job for you for each account. So you have to plan your time accordingly and do your audit planning. This point is not covered specifically. So I would request each one of you to take a look at in that the large borrowers, what is the additional reporting. See, basically it is all about the borrower's KYC, borrower asset classification, type of advances, whatever is the financial statement summary, when is the last audited, what is the collaterals, what is the valuation when last. It is a history of the large borrower, and if it is a large borrower continuing, the previous year LFR would have the annexure, so you can obtain that LFR and cross verify. And also those accounts which have been moved out of NPA, so you can look at the list of accounts which are NPA in the last year, and those accounts which are moved out of NPA and classified as a standard in the current year, you have to do a 100% verification of those accounts. Those accounts which have been critically commented by the previous auditor, concurrent auditor, internal auditor, RBI inspection, again those accounts you have to 100% verify and see whether those comments have been rectified or not, right? So this is the broad overview on your LFR, tax audit report and certificates. So with this I complete my session and open to any questions anyone have. Thank you.
Anyone has question?
Yes, sir.
Do we need to generate a unit for all the?
One good question which I actually missed out mentioning is this is also another certificate. So for all certificates now it is mandatory to generate a unit. So for the bank branch audit you have to generate a unit. And one thing is, since these certificates are issued under one assignment, so one unit is sufficient for all the certificates. So effective from 1st April, even the tax audit reports are also covered by the unit. So unit has to be generated for each branch, not all the 3 branches or 4 branches, whichever number of branches you are assigning. For each branch you have to generate a unit, but one unit is sufficient for all the certificates which you are issuing. So it might be the possibility where the branch itself will pre-print like place, date and the unit number. If it is unit is not printed, you have to manually write unit and the number. Otherwise, if the place of unit is the specific unit is mentioned, you mention the unit. But one unit is sufficient for all the certificates. Now the question that comes up is, while generating the unit, I have to give some numbers or to identify the certification. What should be those numbers which I should consider? Now you can consider the numbers like you are doing an audit of a branch, there is a DP code which is there and you have a balance sheet totals. See, basically the unit is to identify that this is the genuinity of the certificate, authenticity of the certificate. Today we are seeing there are questions which are coming that loans have been given based on the chartered accountant certificate. And for all practical purposes, we know that someone would have just printed our letterhead, used our stationery and generated some provisional certificates or something. It would have been issued and given it to the branch and the loan would have been processed. To ensure to mitigate these losses, we are coming up, the ICA has come up with this beautiful thing on the unit. So we are generating unit to authenticate, yes, that certificate has been issued without even disclosing it is only the person who has the unit number, they would be knowing, they will check whether the certificate which they are seeing and the certificate is correct or not. So for the ICA FAQs, the guidance which has been given, for all the certificates, one unit is sufficient. Yes, sir.
See, the Punjab National Bank scam when it came, one of the factors they have found out is that the employees working in that advances, they are working for too long. Now that also, as an auditor, I feel we have to just have how many of the employees in critical department is working for say 5 years, 7 years continuously. Those things also have to be kept at the back of our mind.
Yeah, so question is, in PNB case, fraud case, we have seen that when the SWIFT related frauds have occurred, one of the reasons also which has caused is the employees who are undertaking these transactions were in the branch for a longer period. Now as a branch auditor, do you have to see this and critically comment? Now as a branch auditor, I would say that from the LFR perspective, if you want to give an additional recommendation, you can do it, but it is the efficacy of the branch operation which the head office have to take. But what as a branch auditor you should definitely report it is, to the extent there is a point on the computerization, what are the aspects which are not computerized fully, or even though computerized but not integrated with the CBS, there is a point. Now there it should have been mentioned that okay, there are SWIFT transactions or some transactions which are outside the CBS, or assuming if the NPA provisioning or IRAC provisioning is happening in a different software and it is marked in the CBS separately. See, these are when some things are happening in a different software and not done a tight integration with the CBS, it is a definite point of commenting. In our day-to-day life, we would also see the client would have books of accounts maintained in, say, a tally accounting software. But for the purpose of billing or manufacturing, there would be a different accounting software which is used for raising invoices or for tracking the production movement and other things. Now, they generate an invoice there and someone would manually key in it here. Whenever two transactions are happening manually, it is clear, like anything which happens in manually, there are 99% of chances something may go wrong. So as an auditor, we have to say what are all the transactions which are outside the CBS and which are not done a tight integration with the CBS. That is what we have to comment if you notice anything of that aspect.
Bank guarantees when the banks issue,
Yeah.
I think that also can be issued without recording in CBS. No?
Yeah, the question is, bank guarantees, can it be issued without recording in the CBS? 100% yes. Bank guarantees can be issued with, like your SWIFT transaction, a guarantee was given without recording it into the CBS. CBS has a module to do it. So that module has to be generated. So you have to see the BG register which has been issued, maintained, the BG generated by the CBS. So are they matching or not? So which is more like a disciplinary when something is doing. So why we have brought in UDIN is the certificates we are issuing is like a track. Now there could be, can I issue a certificate still without UDIN? Answer is yes. So but tomorrow it is more into that certificate is as good as not valid. I'm not fulfilling the compliance procedures. So even a manager who is issuing a bank guarantee without routed through CBS is again possible, but so that is where we have to, in the recommendation when you see the BGs are issued, are they generated by the CBS? So that could be one of the point of the recommendation.
Okay. I'm sure all of you had an excellent learning session. Let us thank the speaker for his valuable time, sharing and knowledge that he has. It's time to present a memento to the speaker as a token of appreciation and gratitude. May I request our branch chairman to come and do the honor. Let's thank the speaker with a round of applause. Thank you, Chairman. So let us wind up for the day.